So, we are starting with the last chapter of your syllabus. Okay. Advanced tax we have just now completed, and we are going to start with TDS and TCS provisions. See, as I told you earlier also, there will be minimum 4 marks question. 4 marks question which will be asked from the chapter return of income, which we completed yesterday. Okay, no? So you cannot leave that chapter in option, and you came to know that how easy the questions are from that particular chapter. Okay, no? So don't leave that chapter in option. Now next is the TDS and TCS chapter. So it has been the practice of the ICI to ask 4 marks question from this chapter also. Now if you will see now, in this chapter the institute has given the entire content of the final CA also. They have put everything. We are going to do only the relevant part which is applicable for us. Yes or no? We are not going to do each and everything, because the TDS chapter is asked only for 4 marks in the exams. And what is relevant for you for those 4 marks, everything will be covered. Don't worry about that. Sure, no? But whatever things which are not relevant over here, I will skip those things. I will tell you to ignore those things. Okay? Now pay attention. One by one we are going to start. See, in your ICI study mat only, I have put a star mark besides a section which is important for you to understand properly. Okay, no? So the first star mark is in front of your section number 190. Can you see 190? Now what this section says: deduction of tax at source and advance payment. Believe it or not, I have explained this entire concept to you yesterday only. Pay as you earn scheme. Did I tell you that? During the previous year, there will be certain incomes which you are going to earn. On those incomes at source only, the payer will deduct TDS and he will give you the balance income. And on certain incomes, if there are no TDS provisions, on those incomes the tax will be directly paid by you in the form of advance tax. And if at all some tax remains to be paid which you could not pay during the previous year, self-assess that in the assessment year and pay that tax as your net tax liability in the assessment year. This is the way in which the tax recovery happens from you. Okay, no? So from where did I got that knowledge to teach you all those things in the last lecture? From here only. Okay, section 190 and 191 both are, both you are aware of. So we are just going to read this part, you will come to know. Okay, wait. The total income of the assessee for the previous year is taxable in the relevant assessment year. Thank you so much, you told us. We were not aware about this. Were you aware about this? Total income of the for the previous year taxable in the relevant assessment year. Okay. For example, total income of the previous year 24-25 is taxable in the assessment year 25-26. However, income tax is recovered from the assessee in the previous year itself through what? TDS, TCS and advance tax. Okay. This I have shown you by way of that timeline. Next one. Another mode of recovery of tax is from employer through tax paid by him under section 192 1A on the non-monetary perquisites provided to the employee. Now if you are an employee, are you liable to pay tax on your salary income? Yes, that gets deducted out of your salary. So whatever salary the employer will give you, out of that salary the employer will deduct the TDS. Now that TDS is nothing but the tax on your monetary as well as non-monetary salary both. But sometimes you tell your employer, take the house keys, take the car keys, take this Ramu Kaka also. I don't want all these benefits from you. Give me cash. So your employer told you, no, 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 you are not supposed to vacate the house, take the car also and take the servant also. What problem you have? You have the problem that I am deducting TDS on your entire salary, including the non-monetary salary also. So don't worry. I will now deduct the TDS on your monetary salary only, but on your non-monetary salary, whatever tax which I was supposed to deduct, don't worry, I will pay that from my pocket. That is an amount of your income tax only, which should have been paid by you from your salary income in the form of TDS, yes or no? But that amount is recovered from the employer because he is agreeing to pay that amount to the government, yes or no? So on behalf of you, some of your tax can be paid by your employer also on your non-monetary perquisites. So during the previous year, what are the tax payments happening for you? On some incomes, the TDS will be deducted. On some incomes, the advance tax will be paid. On some incomes which are non-monetary perquisites, the tax was supposed to be deducted in the form of TDS, but that is not getting deducted in the form of TDS, but that was your income tax only, which will be paid by the employer from his own pocket, which will not be a taxable perquisite for you, 1010CC fully exempt, and which will not be allowed to the employer under 40 clause A subclause 5 under the head PGBP. Do you remember that? So whatever tax which is paid by the employer during the previous year on your non-monetary perquisite is also a tax payment by you only. Getting my point? And for that also you are going to get credit. So whatever TDS, TCS, advance tax and this tax paid on your non-monetary perquisite by the employer during the previous year, these are the recoveries of your tax from you, and some amount can be paid by your employer also for yourself. Yes or no? So this way the income tax is collected from assessees. This is the manner in which the income tax collection happens. The collection is not delayed till assessment year. The collection will happen during the previous year itself. Okay. Now for all these payments of tax which are made in previous year, these are known as prepaid taxes. What you will call them? You are going to call all these payments as prepaid taxes. Prepaid taxes means the tax which you will come to know during the assessment year, that tax is prepaid during the previous year itself. Getting my point? Now these taxes are deductible from total tax. See, I told you, no? These taxes are deductible from the total tax due from the assessee. The assessee, while filing his return of income, has to pay assessee. While filing his return of income, has to pay self-assessment tax under section 140A, and that just we have just seen that how much self-assessment tax you are supposed to pay. So total tax you will calculate in the assessment year. Out of total tax, some taxes during the previous year recovered in this way, that you reduce the balance tax you pay while filing your return as your self-assessment tax under 140A. Yes or no? Next one. Now, if tax is due on total income. Now, after adjusting, if tax is due after adjusting TDS, TCS, relief, section 89, tax credit, okay, under section 115JD, that is AMT credit and all. We used to reduce all these amounts, no, to calculate the self-assessment tax. Yes or no? In case the assessee exercises the option of shifting out. But if he does not exercise the option of shifting out, meaning that he remains in 115 BSE, then that AMT credit which is there now, that is not allowed. Okay. Then under any tax or interest payable according to the provisions of section 191(2) and advance tax. Okay. Now this is the way in which the tax calculation happens and tax payment happens. We have already studied this entire part. Okay. No. So read this part. Okay. No, without interest or fees you cannot pay tax, because on your self-assessment you have to pay this much tax. Okay. So we are just now talking about the tax only. So this much tax you are supposed to pay on your self-assessment. But on your self-assessment, when you are going to file your return, you have to self-assess your interest and fees also, and that you are going to pay. Without that, they are not going to accept your return. Getting my point, what I am trying to tell you? So, if we are talking about tax, so specifically, we are discussing about tax only right now. We are not discussing about interest, fees, etc. That we have already discussed under 140A. But in 140A, whatever tax is supposed to be paid will be calculated like this. Along with that, we have to self-assess 234A, B and C also. And that also we are going to self-assess and pay as per 140A. Done, no sir? Sure? No. Now direct payment 191. This is interesting section. This is interesting. You will enjoy it. Okay. Now in the direct payment of taxes, what 191 says, section 191 says that in the following cases, tax is payable by the assessee directly. In the following cases, tax is payable by the assessee directly. In what cases the tax will be paid by assessee directly? Number 1. In the case of income in respect of which tax is not required to be deducted. In the case of income in respect of which tax is not required to be deducted at source. I told you yesterday also, there are certain incomes on which the TDS cannot be deducted. Like the example of that grocery shop owner, that general store, many customers coming to buy, many customers giving the income. So you are earning income, but on that income, will there be any TDS? No. So on that income, directly the tax must be paid by you. Direct payment of tax should happen on those incomes. Okay. So now, in the case of income in respect of which tax is not required to be deducted, on those incomes, advance tax must be paid. Liable for advance tax. May be liable for advance tax. May be liable for advance tax. This will be only if this balance tax will be 10,000 or more. Yes or no? Then this has to be paid by you directly in the form of advance tax. Otherwise, pay in the assessment year in the form of self-assessment tax. Getting my point, everyone? Now, income in respect of which, they are saying income in respect of which tax is liable to be deducted, but is not actually deducted. So you cannot go and tell the government that, see government, I am earning one income. On that income, the payer was supposed to deduct the TDS. He did not deduct, so what should I do? Now you should ask the tax from him only. Can you say that? No. The income on which the tax was liable to be deducted, payer did not deduct. That does not mean that we are not going to collect that tax from you. You are going to directly pay that tax to us now. Now whatever we are going to do with the payer, that is not your lookout. We are going to penalize the payer because he did not deduct the TDS. Okay, we are going to charge interest from him. He will be considered as assessee in default. But that does not absolve you from your income tax liability. On this, income tax is supposed to be paid by you. You were not paying. We were not able to trace you, or there were many administrative inconvenience. Because of that, we gave the responsibility to the payer to deduct that tax and give it to us. But if the payer fails to do that, you cannot be left, or you cannot say that I am not going to pay that tax anymore. Bloody, this is your income. The income tax on your income you should only pay. Even if on this income the TDS was supposed to be deducted and it was not deducted, don't worry, the tax we are going to collect from you only directly. Yes or no? So, income. What did I say? Income in respect of which tax is liable to be deducted but not actually deducted. That tax you pay as your advance tax or your self-assessment tax. So maybe liable for advance tax or it will be paid as self-assessed tax. So this thing will be copied and it will be pasted here also. Done, no sir? Did you understand what I am trying to tell you? Done, sir? Now pay attention. In view of these provisions, the proceedings for recovery of tax necessarily had to be taken against the assessee whose tax was liable to be deducted but not deducted, meaning that we are going to proceed ahead to recover that tax from you only. Yes or no? Proceedings for tax collection will be made against you and not against the person who was liable to deduct TDS. Now, in order to overcome this difficulty, there is one explanation to this section which provides that if any person, including the principal officer of a company, who is required to deduct tax at source, or an employer paying tax on non-monetary perquisite under section 192 1A, does not deduct or after deducting fails to pay such tax or does not pay the whole or part of the tax, then such person shall be deemed to be the assessee in default. However, the assessee himself has paid the tax, this provision will not apply. Meaning that, see, first of all, we will proceed against you to deduct the TDS. But now, if we proceed against you to recover that tax, there will be unnecessary hardships to you also. Okay. So what we will do, we have inserted one explanation. In that explanation, we are saying that if that fellow who has not deducted the TDS, we will consider that person as assessee in default, and we will consider that person as what? Assessee in default, and such person shall be deemed to be an assessee in default, and if the assessee himself paid that tax, this provision will not apply, meaning that that person will be treated as assessee in default because he did not follow the TDS provisions. The TDS which he was required to deduct, he did not deduct. So we will consider him assessee in default. We will charge the interest, collect the tax from him, okay? But we will not consider him as assessee in default if you yourself have deposited that tax to us. Yes or no? Then that tax recovery will not happen from him because you have yourself paid that tax. But do you remember that for this thing, the payer will have to, yes, the payer will have to give the certificate from his chartered accountant. He will have to obtain a certificate that you have filed your return of income. In that return of income, you have shown this income. On this income, you have paid the tax. That certificate the payer will have to give to the government, and only then he will not be treated as assessee in default. Otherwise, if he fails, we will consider him as assessee in default. We will recover the taxes also and we will recover the interest also from him. Understanding? But don't think that if we could not recover from him, we are not going to ask it from you. We can ask that tax from you also. Okay, no? Understanding? So this was 190 and 191. Okay, this was just for the sake of your understanding. Even if you don't pay a lot of attention to these two sections, there will be no much problem in the exams, because in the exams these questions are not practically asked on these two sections. Okay, now what questions are usually asked? See, in the TDS section, TDS provisions, now we are going to learn that what are the payments on which TDS is to be deducted. We are going to learn this. Learn about the payments. Now these payments will be made by whom? Made by a payer. To whom? To the payee. So there are certain payments which are made by the payer to the payee. So the payer will be liable to deduct the TDS. So we are supposed to learn about those payments. So in this chapter, no, we will become the payer and we will think accordingly. Okay. In this chapter, we are going to become a payer and we have to think that we have made this payment. Okay. In every chapter, you might have seen that our role has changed. In the house property chapter, we were owner of the house property. In the salary chapter, we were an employee. In the PGBP chapter, we were a businessman or a professional. In the capital gain chapter, we were the transferor of a capital asset. In IFOS chapter, we wanted to become whatever we want. Yes or no? We were becoming that. But in this chapter is made from the point of view of a payer making the payment. So all the provisions which we are going to discuss are applicable on the payer. Payer has to fulfill these provisions. So in these provisions, there are certain payments which you are going to make. Okay, you are making this payment, deduct this much TDS and deposit. Oh, you are not making this payment, you are making this payment. So for this payment, there is a separate section. In that separate section, this payment is covered. Okay. So as per that section, deduct TDS and deposit to us. So there are different types of payments, and for every payment, there is a separate section, prepared. As per the provision of that section only, on this payment, the TDS will be deducted. And that TDS which you have deducted, you will now deposit that TDS to us. So if we think from the point of view of the payer, now what will happen? See, payer is making a certain payment, okay, to the payee. Now what type of payment is there? So those payments will be specified. Now what payments are specified, sir? Can you give some examples? Yes, there are the examples like payer is making the payment of salary, payer is making the payment of commission, payer is making the payment of interest, he is paying contract fees, then he might be paying what, rent, etc. So there are many payments. Okay, no, I have just given few examples of those payments. So there are many payments which are specified under the TDS provisions on these payments made by the payer. Now see what the payer will have to do. The first responsibility of the payer will be to obtain TAN. Obtain what? TAN. Now what is this TAN? Okay, what is this TAN? TAN is tax deduction and collection account number. Just like a PAN. PAN is the identity of a assessee. Okay, so as an assessee, identify yourself. Who are you? Where do you live? Okay, if there is some tax recovery, we could find you, we could catch you from this identity. Yes or no? So PAN is an identity given to the taxpayer. PAN is an identity given to the assessee. Likewise, TAN is also an identity which is given to a tax deductor, a person who is liable to deduct the tax for the government and liable to deduct that tax and deposit that tax to the government, because that person is making these specified payments. So on that person, the government has casted a responsibility. Government has put a responsibility on that person to deduct the tax. Now by taking the name of the government, you will deduct the TDS. Hello? Or collect the TDS for the government. Okay? Then identify yourself. Later on, we have to catch you also. Later on, we have to recover this tax from you also. So if you are not identified, then how would we catch you? How would we, identify you? And even this person to whom you are making the payment, he is going to ask for the TDS credit out of his income tax liability. So we should know that the person to whom you are making the payment, is genuinely asking for that tax credit. He is not claiming fake tax credits from us, from his tax liability. So your TAN will help us to identify that okay, the tax was deducted by the correct person, the person to whom we have given the responsibility to deduct the tax. Okay. So there are provisions which makes it compulsory for you to deduct TDS, but that TDS you cannot deduct without obtaining a TAN. Sometimes it is also known as TD-CAN. Sometimes it is also known as TD-CAN. TD-CAN means tax deduction and collection account number. In short, it is known as TAN. Okay, what is this? This is an identity given to the tax deductor or collector who is responsible to deduct and collect the tax by the government. Okay, as per the TDS provisions, if you are responsible to deduct and collect the tax on behalf of the government, yes or no, then make yourself, get yourself identified, take the TAN, obtain the TAN. Okay, first responsibility. Now after obtaining the TAN only you can deduct the TDS. Okay, after obtaining the TAN, becoming a tax deductor, becoming a tax collector, now your second responsibility is to deduct. Deduct what? TDS. Now on what payments you will deduct the TDS? Come on, what payments you will deduct the TDS? The payments are specified. So the payments which we have specified, on those payments you are going to deduct the tax. At what rate you will deduct? We have given the rates also in the provisions. Okay, along with the payments. The payments we have specified, so along with the payments we have given the rates also. So apply those rates for deducting the TDS. You are not going to deduct the TDS as per your own wish. Okay, no. Deduct the TDS at the rates which we are telling you. When you will deduct TDS, we will tell you when you are supposed to deduct. On what payment you are supposed to deduct. Yes or no? So all these things you have to keep in mind, and keeping in mind the TDS provisions, you are supposed to deduct the TDS. Here your responsibility does not get over. The TDS which you have deducted, no, the tax which you have deducted is for us. So now the second responsibility and the very important responsibility is to deposit that TDS to the government. Deduct the TDS as per TDS provisions. Then deposit the TDS to the government on or before the specified due dates. So there are due dates which we have specified. On or before those due dates you are supposed to deposit the TDS. Every month you will deduct the TDS. So after the end of the month, next month 7th or before that, you are supposed to deposit the TDS which you have deducted for this month. So for the month of August, whatever TDS you have deducted in the month of August, after the month is over, next month September will come, no, on or before 7th of September you are supposed to deposit that TDS to the government. If delay is made, there are consequences which you will have to follow. Yes or no? Then after deducting the TDS, after depositing it, your next responsibility is to file what? TDS returns. Now these TDS returns must be filed in prescribed format. on or before specified due dates. One more thing I will add here. Deposit TDS to the government on or before the specified due dates in prescribed manner. How will you deposit? That is also given. When you will deposit, that is also given. And how will you deposit? That is also given. Okay. Then file TDS returns. TDS returns, there are formats. Then issue TDS certificates to the payees, and this will also happen in prescribed format on or before specified due dates. Now these are the responsibilities which are there on the payer. Are you understanding? It is so easy that only one page is sufficient for you to read all these things. Getting my point? Only one page. And which is that page? In the ICI study module, I will tell you. Read that page, this entire stuff will be covered. No need to worry about it. Okay? But see, you are very rarely tested at CA inter level for these procedural aspects. These are known as procedural aspects. That these are the procedures which are to be followed by the payer. And the institute knows that this CA intermediate student will not be that much aware about or that much comfortable about these procedural aspects because he has never done all these things. See, ITR forms, ITR we file once in a year, yes or no? What are the formats, when it is to be filed? Okay, no? But those provisions are not that much relevant. But who is required to compulsorily file return? Whether the return can be filed, belatedly, revised return is there or not. All those things which are there in the return provisions, those are important for you. But the procedural aspect regarding your income tax return filing, those procedural aspects are not that much relevant. Getting my point? In the same manner, there are TDS returns also. TDS procedural aspects also. These provisions, no? For all these provisions, yes or no? There is only one page in the ICI study module which I will tell you all to read. Okay? Read that one page only. No need to do anything else except for that. Getting my point? What I am trying to explain over here, friends? Tell me yes or no. Okay. Now see. After this, now let us talk about the payer only. First, let us talk about the payer. Now tell me why the payer would, take all these botheration on his head. See, the payer has to do so many things. Just become a payer and think. You are making some payment to someone and the government from the background coming and telling you, hey, making the payment, wait, obtain TAN. Then follow the TDS provisions. Okay, as per the TDS provisions, deduct the TDS for us. and deposit that, file the TDS returns, then issue the TDS certificates, etc. Why would you bloody take all these botheration on your head? You will tell the government, go to hell. Why I will do this thing for you? Understanding or not, even the government knows that if we are just going to tell him to do all these things, he is not going to do voluntarily, or he is not going to do happily all these things for us. And why the TDS provisions we are bringing? See, this payer will be giving these payments to many payees together. For example, there is a bank who is giving interest to many deposit holders. There is an employer who is giving salary to many employees. So from these many payees, going and asking for income tax from them, because it is an income for them, going and asking to these many payees, asking to pay their income tax will be a very time consuming job for us. There will be administrative inconvenience. And there are bright chances that the payees are not going to pay taxes to us. There will be tax evasions also. So the effectiveness with which the tax could be collected from the payee, that effectiveness is very less. So instead of asking the taxes from the payees on their incomes, catch the person who is making that payment, catch the person who is giving them the income. No. So one person giving income to many people, yes or no? Everyone getting their income from this person only. So it will be very easy to catch this person. So this is the source from where many people are getting their incomes. So at source only, the income tax of all the pay should be deducted and net income should go to them. So that at source only, whatever income tax is deducted on the incomes of different pays, that tax with very ease the government could recover from this one person only. There will be administrative convenience to the government. Government will not have to run towards too many people asking for the income tax from them, and tax collection will be easily done, and there will be very less cost involved in collecting those taxes. So the government has thought that it should be the correct way to collect the income tax. But why this payer will help us? Why he is going to take all these, botheration on his head? We will have to compel him, because he is not going to happily do all these things for us. So payer, tell us one thing. That are you going to make this payment to the payee? Yes, payer is saying yes, I am going to make these payments to the payee. Okay. So the payment for you, that payment is your expense, no? Payer, that payment is your expense, no? Payer will say yes. The payer will say yes, that this is my expense. Okay. So you are going to claim this expense as a deduction, no? Under various heads. Some payment will be your income, some payments will be allowed out of PGBP head, some payment will be allowed in IFOS head, some payments will be allowed under house property head. Yes or no? So the payments which you are making will be your expense, which we are going to allow you in the form of deduction. Yes or no? What if we restrict those deductions on these expenses? So if you fulfill all the TDS provisions and do whatever we tell you, and however we are telling you to do it, you are doing in that same manner, most welcome. Expense is there, take the deduction. Deduction will be allowed only if TDS provisions are are what? Complied with. Meaning TDS, we have told you that much TDS you have deducted. We have told you to deposit, you have also deposited the TDS. Correct time you are filing your returns, etc., issuing the TDS certificates, etc. Yes or no? So we will not mind giving you the deduction for those expenses. Otherwise, you very well know that we can disallow the entire expense if the payment is made to non-resident payee. Hello. We can disallow up to 30% also under PGBP head. Do you remember? No, PGBP IFOS. 30% of the payment we can disallow if the payment is made to whom? A resident payee. So, before taking any, before thinking about anything else, think that if you will not comply with the provisions of TDS, these expenses will not be allowed because the payments which are made by you is your expense. Understanding what I am trying to tell you over here? Now think from the perspective, see the payer, for payer we have discussed, okay. Now think from the perspective of a payee. For payee, can I say for him, for this payee, can I say this will be his income, the payment which is coming to him is his income, and he is going to recover that income, he is going to receive that income after TDS, meaning net amount of income he is going to get. Now this income he will show as a taxable income under any of 5 heads of income. Now in whichever heads he is trying to show that income, he is getting net income after TDS only. But we are telling him to add TDS also. So always the gross income, will be shown as taxable under any of the 5 heads as is his income, and the TDS which got deducted from his income, which is showing as his income only. TDS was his part of income which got deducted in the form of tax and coming to us. For that he is going to get a tax credit from total tax liability computed during the assessment year. Yes or no? And we all know that this kind of thing happens, no? If you are receiving salary from your employer, so your employer will fulfill the TDS provisions. For him, your salary payment is his expense, which is going to claim as a deduction under PGBP head. Will be allowed to him only if he has complied with the TDS provisions. But for you, think about you. Your salary coming to you is your income, no? Will it be taxable for you under any of the 5 heads? Yes, you are going to show that under the head salary. Yes or no? Now under the head salary, when you are going to show this, you are getting a net amount of salary after TDS. Net salary you are going to get. But remember, whatever TDS the employer has deducted, you will add that TDS in your salary and you are going to show the gross salary as taxable income under the head income from salary. And the TDS which got deducted on your salary by your employer and deposited to the government, when in the assessment year you will calculate your total income. In that total income, whatever tax you have calculated, total tax, out of that total tax, the TDS from salary, you are going to get the credit. Just like that winnings, just like that interest, just like that rent, any income can come to you. But all the incomes will come after deducting the TDS, because the payers are liable to deduct the TDS as per the TDS provisions. Yes or no? So whenever an amount of income is coming to you, on that amount the payer is going to deduct the TDS. And if net amount is coming to you, always show the gross amount of that income taxable under any of the 5 heads, and then the amount which you have shown as your income, the TDS which you have shown as your income as a part of gross income, yes or no? Later on, take the credit of the TDS out of your total tax liability. Getting it or not? Now, one by one, see, this is something which we all know. Okay, this is also something which we all know. Color, green color. This is also something we know. This also we know. So we are not supposed to get into these things. We are supposed to get into these things. For this, there is only one page in ICAI study module, which I will tell you to refer. That's it. One page in ICAI study module will cover this entire procedural part for you. Getting my point? So that one page we'll read. Okay. Now, coming to the main provisions which we are going to learn here. We are going to learn these provisions. What are the payments specified? And on those payments, what are the rates of TDS? How that TDS is going to be deducted? When that TDS is to be going to be deducted? Yes or no? So now coming to the main sections. Okay. Now see, the payments which I am talking. Yes or no? So actually speaking, section 192 to 196. What did I say? 192 to 196. There are different sections. Under each of the section, what is mentioned, I'll tell you. See, if this is the payer making this payment to this type of payee, on this payment TDS the payer will deduct at this rate, and at what time the TDS will be deducted? Yes or no? So TDS will be deducted at the time of dash. Okay. 5 things can you see? Payer making this payment to this type of payee, TDS rate will be this much, and that TDS will be deducted at this time. That's it. These are the TDS provisions for you. Every time fill in the blanks will happen. Okay, this payer, this payment, this payee, okay, TDS rate this much. Oh, TDS is to be deducted at this time. Done. Understanding? So easy, so easy. But why the students find it difficult, you know? There are many sections. Different types of payments. And for every different types of payments, what happens? Different rates are prescribed. So it becomes very difficult for students to remember them. Yes or no? Otherwise, the provisions are this simple only. But wait, in certain sections, along with this, they have given some exceptions also. Exceptions also. Meaning that in this exceptional case, even if the conditions, if all the above conditions are fulfilled, but if the case is covered by this exception, no TDS is required to be deducted on that payment. For example, if I tell you that employer is liable to deduct TDS from your salary, okay, so who is the payer? Employer. Who is the payee? Employee. What payment is covered? Salary. And TDS is to be deducted at the rates of tax applicable to the employee. Now the normal rates of tax applicable are Finance Act rates or 115 BSE rates also. Okay, no? At that rate, the TDS is to be deducted at the time of making the payment. At the time of making the payment. At the time of making the payment of that salary. Not at the time when the salary will be credited in my books. No, not at the time when I am passing the entry in my books for salary. No, not at that time. The TDS will be deducted at the time of payment. Every month the payment will be made. No, at that time the TDS will be deducted. But there is an exception. And in exceptions you will see, no, exceptions are thresholds only. Majority of the case, threshold only. If the taxable salary paid to the employee during the previous year by the employer does not exceed the basic exemption limit, not requirement of any TDS. TDS will not be deducted. Understood? If you will go to winnings, the person giving the winnings to the winner, what payment is made? Winnings income. TDS will be deducted at the rate of 30% at the time of payment or credit, whichever happens earlier. Okay, so in that case, the TDS will not be deducted at the time of payment. It will be deducted at the time of payment or credit, whichever happens earlier. So either the payment is made to the winner or I record that winnings in my books, whichever happens earlier. At that time, I have to deduct the TDS. TDS will be deducted always as per that provision 194B. But there is an exception. If the total amount of winnings given to the winner does not exceed 10,000, no liability of TDS. Exception is threshold. So there are other exceptions also in different sections, yes or no? So exception means a threshold limit. To that extent, if the payment is made, there will be no requirement of TDS. But if the payment goes above that threshold limit, then on the entire payment the TDS is required to be deducted. Not the payment in excess of that limit. Not the payment in excess of that limit. On that entire amount, now the TDS will be required to be deducted. Yes or no? So in every section, no friends, we are going to see all these 6 things only. 6 things. Number 1, who is the payer? Number 2, what type of payment he is making? Number 3, who is the payee? Number 4, what is the rate of TDS? And number 5, when the TDS will be deducted? And last but not the least, what are the exceptional? Okay, one by one we are going to start these provisions. When we finish all these provisions, no, your majority of the part of TDS chapter will be over. See, there are many sections, I will tell you in the very beginning only, many sections. But we are going to focus more on those sections which are important and which are repeatedly asked in the exams. Okay, and you will see the questions also. No, you will find those questions so easy, no. But the content and the volume of this chapter is too much for 4 marks. Hence, many of the students leave this chapter in option. But I would strongly tell you not to keep this chapter in option. The moment you will get a question on this chapter, no, trust me on this, sure shot 4 marks are there in your pockets. Sure shot. So easy questions. Getting my point? Okay. So, see, one by one we are going to start with the sections. Okay. So, the first section which we are going to start is section 192. But before that, there are some things, some concepts which will be applicable in all the sections. So instead of repeatedly saying those things again and again, what I will do, I will make some common points. What did I say? Common points. And I will say CP1. CP1 means common point number 1. Okay. Now, whenever I am discussing a common point, that point is applicable throughout. or it is applicable in many sections. Okay, so instead of discussing that common point again and again, wasting your and my time, I will discuss it once and for all. That point is done. Then in every section, if this point is coming, I am not going to discuss it again and again. Getting my point? So the first common point which I would like to discuss here before even starting the main provisions, the first common point which I would like to discuss, please remember that payer is required to deduct TDS from specified payments at the time of payment or at the time of payment or credit, whichever happens earlier. Okay, no? So sometimes in some section they would definitely tell you that the TDS is to be deducted at the time of making the payment. So for those sections you are supposed to be careful that the TDS is deducted at the time of payment only. So which are those payments? Okay, at the time of payment. So which are those payments? Under section. This will be fill in the blanks. What did I tell you? Did you understand? And this common point 1 will be finished after we finish all the sections. Because in some section you will see payment or credit whichever is earlier. No, in almost every section you will see payment or credit whichever is earlier. But very few selected sections are there where you will see that if this payment is made, then the TDS will be deducted at the time of making the payment only. Okay, so one payment I will write down here only. Payment under section 192. The first payment is salary, which we are going to discuss now. So the employer will deduct the TDS at the time of making the payment of salary. Yes or no? But later on, if we'll come to, for example, if we are coming to 194H. So under 194H, the TDS is deducted on commission or brokerage. So if the payer is making the payment of commission or brokerage at that time, or payer has recorded that commission or brokerage in his books, credited that commission or brokerage in his books, whichever happens earlier. Because in that section it is not given that the TDS will be deducted on what basis? Payment. TDS will be deducted at the time of making the payment. No. So if in that section it is not written, it will be definitely written there that the TDS is to be deducted under 194H at the time of making the payment of commission or brokerage, or at the time of crediting that amount in the books of the assessee, whichever happens earlier. For example, commission or brokerage I have recorded in my books in the month of September. In September month end entries are passed. So in the month of September, I have recorded the commission in my books. So this is my commission expense for this month. And the payment for this commission I am making in the next month, October. So the commission is recorded in books in September, credited in my books in September, and paid in the month of October. Payment or credit, whichever happens earlier. So credit happened earlier in the month of September. So the TDS on this amount must be deducted in the month of September. So this will be the TDS for the month of September. Has to be deposited to the government on or before 7th of October. Getting my point, everyone? Now let's say salary. Salary payment done by the employer. Every month the employer, end of the month, records the salary in the books, gives the credit of salary end of the month, and pays that salary on the 5th of the next month. So payment happens in May. For example, payment happens in May. April month salary paid on 5th May. And it is recorded in the month end only, in the month of April only. Yes or no? In the books it is recorded. Payment or credit, whichever is earlier, you are not going to do here. Because salary is covered in the left hand side. See, at the time of making the payment of salary, the TDS will be deducted, and not that at the time of giving the credit in your books. Getting my point? So likewise, there are some other payments also. 5-6 payments are there. Whenever you see such payment, come to this common point 1, and besides this 192, you will write that section also. Okay? So payment under that section, the payment which is covered under that section, on that the TDS will be deducted at the time of making the payment, so that you will come to know. For all the other sections, the TDS will be deducted at the time of payment or credit, whichever happens earlier. Will you remember, everyone? Okay. So let's start with the very first section, salary. See, this is the biggest section in your entire TDS provisions. Okay, no? Biggest but very easy. Very easy. So slowly and gradually try to understand this. Once you are finished with 192, no? Then remember, other sections are very easy. Very easy. This is easy only, but there is a lot of content over here. Okay, let's pay attention. See what they're trying to say. Applicability of TDS under section 192. This section casts an obligation on every person responsible for paying any income chargeable to tax under the head salary. As per this section, every person who is responsible for paying any income, chargeable under the head salary, meaning that this section puts a responsibility on the employer. And who can be employer? Employer can be any person. Okay, paying the salary to his employee. Now see, I will tell you, this is employer. In your ICI study mat only, employer. Tell me, employer is any person making the payment, paying any income chargeable under salaries head. To whom? Employer giving salary. To whom? To the employee. Now my dear friends, the employee will always be an individual. He can be a resident also, he can be a non-resident also, will not make any difference. So any employer paying salary to his employees, whether the employee is resident or a non-resident, will not make any difference. The employer will be liable to deduct TDS from that salary. That's it. Okay. So who is the payer? Come on, tell me. Employer. Employer can be any person? Yes. Who is the payee? Payee is an employee. Employee. can be resident also, can be non-resident also. See, this is the section, okay, where the payee's residential status is not important. In other sections, when you will come, no, in other sections, all the sections which you are going to learn are made applicable only if the payments are made to residents. So in other sections which you are going to study, no, when you will come to 194C, contract fees, when you will come to 193, interest on securities. So the payment of interest on securities made to a resident payee, only then 193 will be applicable. So here 192 will be applicable even if the payment is made to resident employee or even if the payment is made to non-resident employee. The TDS will be deducted as per this section only. Yes or no? So pay attention. Now, what is the income covered, sir? Income covered is salary. Okay. Now, manner of tax deduction. When the TDS will be deducted. Come on. I have already told you the TDS will be deducted at the time of making the payment. Making the payment of what? Salary. Okay. But at that time the TDS will be deducted at what rate? How the TDS will be deducted? So the provisions are saying such income tax, the tax which I am supposed to deduct from the salary of my employee, has to be calculated. See, they have not prescribed any rate over here, okay, no? So first I will have to, what? I will have to calculate the average rate of income tax. Average rate of income tax, wow. On the basis of rates in force for the relevant financial year in which the payment is made, on the estimated total income of the assessee, where the employee intimates to the employer his intent to exercise the option of shifting out of the default tax regime. Okay, average rate of income tax. What is that average rate of income tax? Dividing the amount of income tax calculated on the total income by such total income, you are getting average rate of tax. Okay, now they are saying, see, first 2 points, if I summarize the first 2 points, employer will deduct TDS from the employee of salary. At what rates? At normal tax rates applicable. Wait. Employer will deduct. Employer will deduct how much tax? Employer will deduct tax calculated by applying what? Normal tax rates. Now the tax calculated by applying the normal tax rates only if the employee intimates the employer that he is not following 115 BSc. He does not intend to follow 115 BSc. See, after the previous year is over, at the time of filing his return of income, he can follow 115 BSc, he cannot follow 115 BSc. But right now, in the previous year, if the employee intimates that employer, please deduct my TDS, please deduct the tax from my salary by applying normal rates of tax. Don't apply 115 BSc rates. Calculate my tax on what basis? On the basis of normal tax rates applicable to me. And that tax you deduct from my salary. But for this intimation to employer is to be given by the employee. Okay. Now, there can be a chance where there is no intimation given. Employee does not intimate that employer, I will shift out, apply normal rates. In that case, the employer will calculate the tax by applying the default tax regime rates, 115 BSE rates. Yes or no? So it is written over here. See, if intimation is not made, what did I say? Intimation is not made by the employee, it would be presumed that the employee continues to be in the default tax regime under 115 BSE. Accordingly, in such case, the employer has to deduct tax at source on income under section 192 in accordance with the rates provided under section 115 BSE. So, I will write down here that tax to be calculated by applying tax calculated by applying 115 BSE rates, 115 BSE rates if employee intimates not shifting out or does not intimate anything. If he intimates that I am not shifting out, follow 115 BSE, then 115 BSE rate. Or he does not intimate only, then it will be presumed that he is not shifting out. Then apply 115 BSE rates. So, the employer will give the salary to the employee, and from that salary, the employer is liable to deduct this tax. Employer is liable to deduct this tax. Now, forget about what is average rate and this and that you are going to learn. Don't worry. But did you understand this much? Now, this tax is to be calculated by applying what rate? Normal rates or 115 BSE rates. When normal rates are to be applied and when 115 BSE rates are to be applied by the employer, you came to know, na? See, if I am an employer, become an employer and think that we are employer and we are giving salary to our employee. So, from that salary, we are liable to deduct what? TDS. So, now at what rate should I deduct the TDS? Because see, the TDS will be deducted in the beginning of the year only. Year has started. So, this year you are going to earn salary from me, no? So, on that salary, I am supposed to deduct the TDS from you. So, very beginning of the year, first month itself, April month itself, the employer is going to ask the employees that employees, please tell me at what rate the TDS you want me to deduct from your salary. So, employees will raise the hand, sir, deduct TDS at normal rates. Okay. For you all, we will deduct the TDS at normal rates. Few employees will raise the hands. Sir, from our salary, deduct the TDS at 115 BSE rate, sir. Okay. Few employees are not in office or from few employees, intimation could not be taken. It will be assumed that they have not shifted out and from their salary also, 115 BSE rate, the tax will be calculated and that tax will be deducted. Now, the salary will be paid for the month of paid for the month of April. The first month salary will be paid. Now, just imagine, out of that salary, will this entire amount of tax for the full year should be, because this is the tax which has to be calculated on the entire year's salary. Hello. So now what the employer will do in the very beginning, he will estimate the total income of his employees. Estimate his total income of his employees. How will he estimate? Come on, tell me. See, I'm not going to ask everyone that how much total income you are going to earn, how much total income you are going to earn. It will be pointless and useless. But definitely, whatever total income everyone will earn, out of that, the salary will be definitely there, which I am going to give them. Majority of the employees will have in their total income, majority income will be the salary given by me only. So, will I know that how much salary I am going to give to each of my employees? In the beginning of the year only, the employer will know that how much salary I am going to give to all my employees. So, estimated salary is nothing but estimated total income for all of them. Hello, sir. Now, on the salary which I am going to give to one of my employees, for example, the name of the employee is Shubham. So Shubham is one of my employees and I am going to give him a salary of 60,000 per month, which I am giving him. So 60,000 into 12. 12 months, I am going to give him how much salary? 60,000 into 12, 7,20,000. So I know in the beginning of the year only that how much salary I am going to give to Shubham for the full year, 7,20,000. Now I will ask Shubham, you are going to get how much salary from me? 7,60,000 per month you are getting, no macha? How much you are going to get? 7,20,000 from me you are going to get. Tell me, you want me to deduct TDS at normal rates or 115 BSc rates? So Shubham will say, sir, I will opt out. Please follow normal rates. I will follow normal rates. So please deduct my tax calculated at normal rates. I'll say, okay, no problem. But for that, he has to intimate me. But what if he intimates that, no, sir, I will not shift out. I will remain in 115 BSc. Or he does not intimate only. I'm asking him, and he is not answering. No intimation coming. It will be assumed that he is going to follow default. So what amount I will apply? 115 BSc rate I will apply. Okay, no? Now I cannot apply this entire rates, normal rates or 115 BSc rates on his full salary. Why? Don't you think that the entire salary which I am going to give him for the year, out of that salary he is going to get 50,000 standard deduction, 75,000 standard deduction. So I will consider that 50,000 standard deduction and 75,000 standard deduction, depending on the fact that what type of rate I am applying. Yes or no? Hello, sir. So for example, let us take a simple example. Normal tax rates, he has told me that, sir, I will shift out. I am intimating you, apply the normal rates. I said, okay, no problem. How much salary you are going to get? 7,20,000. And now since you have intimated me that you are going to shift out, so 50,000 standard deduction. Okay, no? So 7,20,000 minus 50,000. Tell me. Six lakh 70. Now on that entire 6,70,000, if I see, do I pay him the salary for the full year? Taxable salary in his hands will be 6,70,000. Believe it or not, if he'll have other incomes, definitely his total income will be higher than this only. But forget about his other incomes. If his income, total income includes only this salary also, can you say that his salary, meaning his total income, is more than his basic exemption limit? Meaning the taxable salary given by me is more than his basic exemption limit. Yes or no? Am I liable to deduct TDS? Yes. But if the taxable salary which I am going to give him does not exceed his basic exemption limit, now I will apply 2,50,000 basic exemption. Why? Because 115 BSc is not followed. Yes or no? So 115 BSc not followed, basic exemption limit 2,50,000. What if I am giving him a total taxable salary of 2,40,000 only? Will I deduct any TDS? No. Why? Because his taxable salary which he is going to get from me during the year which is definitely going to become his total income, a part of his total income, is not more than his basic exemption limit. Hello, why would I deduct the TDS? No requirement of TDS. But in my case, which I told you, 7,20,000 minus 50,000, taxable salary is how much? 6,70,000. Is it more than his basic exemption limit 2,50,000? Yes. So now on this entire 6,70,000, I will assume as if this 6,70,000 is his total income, and I will apply the normal tax rates on this. So now let us apply the normal tax rates. On first 2,50,000 there will be no tax. Then 2,50,000 to 5 lakhs, there will be 12,500 rupees. Then 5 lakh to 6,70,000, on 1,70,000 there will be 20% tax. So that will be 34,000 plus 12,500 will be 46,500. Will he be liable to pay any surcharge? No, because his total income is only 6,70,000. Will he be eligible to get any relief? No, because his total income is already more than 5 lakhs. Getting my point? So tell me, total tax is 46,500 plus I will have to apply 4% cess. Are you all getting 48,360 on your calculators? So for the entire year, whatever taxable salary I am giving is more than his basic exemption limit. Considering that amount only as his total income, if I have calculated his tax liability on that 6,70,000, his tax liability comes to how much? 48,360. This is the tax calculated at what rate? Normal rates, which I am supposed to deduct from his salary, because he is not following 115 BSE as per his intimation. Yes or no? So tell me, how much tax? 48,360. This is my first example, everyone. Now, if he would have intimated me, sir, I will follow 115 BSE, or he has not given me any intimation, then I would have to apply the 115 BSE rates. So let's apply 115 BSE rate. But wait, now 115 BSE rates will not be applied on 670. 7,20,000 I am giving him. Hello, this is calculated on how much amount? 6,70,000. Yes or no, sir? 6,70,000. Now let's calculate one amount on his salary, assuming that he is following 115 BSE. Yes or no? So 7,20,000 minus 75,000, he is going to get what? 75,000 standard deduction. So his salary, taxable salary, now it will not be 6,70,000, it will be 7,20,000 minus 75,000, it will be 6,45,000. Now on this 6,45,000, I will not apply the normal rates, I will apply 115 BSE rates. What are the 115 BSE rates? Up to 3 lakhs, no tax. 3 lakh to 7 lakhs. 7 lakh will not go, 6,45,000. Hello, 6,45,000. Tell me, 6,45,000, how much? 17,250. 6,25,000 minus 3 lakhs will be 3 lakh minus 3 lakhs will be 6,45,000 minus 3 lakh. So it will be 3,45,000. On that 5% will be 17,250. So 17,250. See, surcharge I don't have to consider. Rebate I don't have to consider. I will add 4% right now. 17,940 is the tax. Okay, no? Which is calculated at what rate? Calculated at normal rates. Okay, but this is 115 BSE rates. Now tell me, this is calculated on what income? This is calculated on the total income of 6,45,000. Getting my point? Now do one thing. Tell me, can this entire tax, which is for the full year, can it be deducted fully from his April month salary? Because the TDS will be this much only. This has to be deducted when the salary is paid to him at the time of making the payment. So at the time of making the payment, I am not going to give him a payment once in a year. No, I am going to make him the payment for 12 months. 12 months salary I am going to give him. Yes or no? So this has to be deducted on monthly basis. So every month, whatever salary 60, 60, 60 I am giving, from that will I deduct 48,360? Will I deduct every month 17,940? Because this is not the tax on this month's salary. This is the tax on the entire year's salary. Getting my point? Entire year's income. So what I'll do, I will divide this amount by 12. Or. If I will divide it by 12, see, 48,360 divide by 12, no, it will give me 4030 per month. So if I divide it by how many months? 12 months. Okay, no, if I divide it by 12 months, I will get 4030 per month. So whenever the April month salary I will give him, no, payment of April month salary 60,000. Out of that I will have to deduct 4030. May month salary, out of that 4030. June month salary, out of that 4030. Understanding or not, everyone? Now tell me, if I do the same thing here, then I will divide it by 12 months. So this will be 17,940 divided by 12. It will be 1495 per month. Getting my point? So 1495 per month I will deduct. April, May, June, July, every month this amount will be deducted out of his salary. Getting my point? Hello sir, please pay attention. Wait now. Every month whatever amount I am deducting, if I calculate an average rate of tax also, then also the payment will be same only. How come? 48,360. Take the amount 48,360 on your calculator. Divided by 6,70,000, because that is a tax which you have calculated on 6,70,000 into 100. 7.2179, meaning 7.22%. This is average rate of tax. 60,000 you have. Hello. On that 60,000, you can apply this rate also, average rate. So every month, 60,000 into 7.22%, 4332. Meaning there will not be a lot of difference. Okay. By applying the average rate of tax, that average rate of tax is calculated. How that is calculated? By dividing the tax amount by the amount of total income on which it is calculated. So you are getting average rate of tax. Apply that average rate of tax on every month of salary. Then whatever amount is coming, that also can be deducted as a TDS. Getting my point? Or the TDS can be deducted this much amount also. Even if you are deducting this much, what is going to happen? You are going to deduct the entire amount of tax calculated. Getting my point, everyone? Here, if you will apply, see, 17,940, that is calculated on how much amount? 6,45,000. So divided by 6,45,000 into 100, you are going to get 2.78%. Hello sir, did you get 2.78%? Apply that 2.78% on 60,000. 60,000 into 2.78%. That is 1668. Getting my point? And why this difference is coming? The reason is very simple, that you took 50,000 standard deduction. You took 75,000 standard deduction. And because of that, no, the total income got less. So your tax liability is calculated on the total income, which is after what? Taking standard deduction. Hello sir, your tax liability is calculated on the total income after taking standard deduction. So on that total income, if you have calculated this tax, and if you are dividing that tax by this amount of total income, then definitely the tax rate is going to come a little bit lower. Yes or no? And that tax rate, if you are going to apply on what? Your monthly salaries, no? What will happen? The tax deduction amount is going to come a little bit less only. Why? Because standard deduction is not considered out of 60,000 every month. Getting my point? So it is advisable to calculate the TDS like this. Okay, so 48,360 is the total tax which is to be deducted. This is more logical. Getting my point? This is the total tax which is to be deducted on 6,70,000. Now, if you calculate the average rate and you apply that average rate on the monthly salary, then also it is okay, no problem. But instead of applying that average rate, this salary will be given in how many months? 12 months. So this tax has to be deducted within how many months? 12 months. So divided by 12, whatever amount will come, deduct that amount from every month's salary. Getting my point, everyone? Sure. Now pay attention. One very easy thing which I am asking you. How much was the monthly salary? 60. For how many months? 12 months. So the salary payment will happen 12 months. So total tax will be deducted from 12 months salary, hence divide by 12. What if you have joined the employer on 1st of July? When did you join? 1st of July. So 1st July to 31st March you are going to work. 1st July to 31st March you are going to work. For how many months? 9 months. April, May, June, leave. July to March, 9 months you are going to work, no? And monthly salary, for example, monthly salary was not 60,000, monthly salary was 80,000. So 80,000 into 9 will be how much? 80,000 into 9 months you are going to get salary. April to March you are not going to get the salary now. Now you have joined the employer, this is the first year. And now you have joined the employer on 1st of July. So July to March, how much you are going to get? 80,000 into 9, 7,20,000. Same amount I have kept deliberately, so that the calculations remains same. Okay. So now that 7,20,000 you are going to get from me for the full year. Out of that you are going to take 50,000 standard deduction. 6,70,000 will come. On that the tax liability will be same only. But now this tax I am not going to deduct out of 12 months salary which I am going to pay you. Now this tax I will be deducting in 9 months. Out of your 80,000 every month which you are getting from me, no, from that 80,000 how much I am going to deduct? 48,360 divided by 9. Hello. So that will be 48,360 divided by 9 will be 5,373. 5,373 per month. That I am going to deduct every month. And here, for example, 80,000 into how many months? 9 months. Same thing would have happened, 9 months. But 7,20,000 is coming. Out of that 75,000 standard deduction. Hello. The tax would have been same only. 17,940. But this 17,940 I would have deducted in how many months? 9 months. Because you have joined the employment from July. So this will be 17,940 divided by 12. No, now it will be divided by 9. 1993. 1993 per month. Did you get it, everyone? So this is the way in which your TDS from salary is computed. Will you be able to do such type of computations? Very easy, very easy. Okay. So now let's see. Now they are saying that it is also clarified that intimation would not amount to exercising option. Meaning right now, in the beginning of the year, you are telling your employer that employer, I am intimating you that I will shift out or I will remain in 115 BSE. So accordingly, apply the tax rates and deduct my TDS. So right now you are telling your employer for the purpose of TDS, yes or no? That does not mean that whenever in the assessment year you will file your return, at that time also you are supposed to do the same thing. No, at the time of filing your return in the assessment year, you can shift out also. If right now your employer was deducting TDS as per 115 BSE, because you intimated him that you are not going to shift out, or you did not intimate, so he deducted your TDS as per 115 BSE rates. But in the assessment year, when you calculated your total income, when you calculated your tax as per both the regimes, normal regime and 115 BSE, You actually came to know that as per normal tax regime, your tax rate is less. So definitely at the time of filing your return, can you shift out? Yes. Even if your TDS was not deducted as per normal rates, while filing your return, you can shift out. No problem. Even if your tax was deducted at normal rates, at the time of filing, you can still follow 115 BAC. That is the clarification given by CBDT. Please remember. So it is not necessary that if you are going to tell your employer that you are going to follow 115 BAC, then at the time of filing also you are supposed to follow 115 BAC. It is not necessary. You can shift out also. It is not necessary that right now if you have told your employer that you are not going to follow 115 BSc, calculate my tax and deduct my tax as per normal rates, then at the time of filing also you are going to compulsorily follow normal scheme. It is not necessary. You can follow 115 BSc also. Getting it, sir? Now, see the concept of payment of tax on non-monetary perquisite. I will explain this point. This point I will explain. Okay, wait. See, now I'm taking one more example. Your employer is giving you a salary of rupees 12 lakhs. How much is giving? 12 lakhs. Okay, and you are the employee. Now, out of this 12 lakhs, there is some monetary salary also. And there is some non-monetary salary also. Okay, no? So, how much is the monetary salary and how much is the non-monetary? Non-monetary means what, you know? The employer is giving you accommodation, employer is giving you motor car facility, accommodation, employer is giving you domestic servants. So there are lot many benefits the employer is giving. The value of that benefit is also taxable for you as your salary. Yes or no? We have done this part in the salary chapter. Okay. Now pay attention. If the non-monetary salary given to you was 2 lakh rupees, how much? 2 lakh rupees. And the monetary salary definitely was 10 lakhs. Okay. Now what is happening? See, you have the breakup of the salary. That 2 lakh rupees you are getting as what? Non-monetary salary. 10 lakh rupees you are getting as monetary salary. But definitely entire 12 lakh is your income. Entire 12 lakh is your income. Say yes. On that entire 12 lakh, whatever tax is to be paid by you only, which the employer will deduct also. Yes or no? Now let's assume that on this 12 lakh, you are only paying the tax. Meaning on this monetary salary also you are paying the tax, and non-monetary salary also you are paying the tax. And that tax is deducted by the employer from your salary. Okay, no? So, can I say from this salary, there will be a standard deduction? Now, depending on the fact that what type of scheme you are following, yes or no? If you are following 115 BSc, then the standard deduction will be 75. And if you are following normal, then the standard deduction will be 50. Let us assume that you have intimated your employer that you are going to follow normal only. Okay. So, if you are following normal, you are shifting out. So, definitely your employer will say that, okay, you are going to take 50,000 standard deduction. So, how much will be your taxable salary now? 11 lakh 50. Now, what he will do? He will apply normal tax rates. Normal tax rates on this taxable salary only, no? And by applying the normal tax rates, he is going to calculate your tax liability. So now your tax liability will be how much? First 2,50,000, no tax. 2,50,000 to 5 lakhs, it will be 12,500. 5 lakh to 10 lakh, it will be 1 lakh rupees. And any income over and above 10 lakh, 1 lakh 50, yes or no, on that 30%. So it will be 45,000. Getting it or not, everyone? What I am doing? Sure, no, sir. So tell me, 45,000. So please calculate 1,12,500 plus 45,000. It will be 1,57,500, and we will add 4% cess also. Okay, so it comes to 1,63,800. Everyone. Now this salary will be given to you by the employer for 12 months. Okay, no? So we will divide it by 12 months. So divide by 12, you are going to get 13,650 per month as your TDS. Now don't you think this 1,63,800, this 163,800 includes the tax on your monetary salary also, and this includes the tax on your non-monetary salary also. This entire tax on your entire salary is getting deducted out of your salary income only. So if the employer is not saying that he is going to pay his, he is going to pay tax on your non-monetary salary, then from your salary this much TDS every month will be deducted. Are you all understanding? And that too also if you are not following 115 BSc. If you follow 115 BSc, then this amount will change. 75,000 standard deduction will come. Then it will become 11,25,000. You will apply 115 BSc rates. The tax will change. So this per month amount will also change. Yes or no? Okay. Now let's say in the same example, if this will be the TDS under section 192(1) from employee salary. Now if employer agrees to pay tax on the non-monetary salary, how much? 2 lakh of the employee, then definitely the TDS which will be deducted will not be 13,650, it will be less. Because in this 13,650, there is a tax on your non-monetary salary also. There is a tax on your monetary salary also. Both the taxes are getting deducted from your salary. So now out of this tax, whatever tax which is there on your non-monetary salary, the employer is promising that he will pay from his pocket. Yes or no? So employer agrees to pay tax on the non-monetary salary. So in this case, what will happen? The TDS under section 192(1) will be a different amount, and tax on non-monetary salary of employee to be paid by employer under section 192(1)(a). This amount will be a different amount. Now both the amounts will be calculated separately. Very easy, very easy. See, this first we will calculate, then the balancing amount will be TDS. Okay, no? So how much was the tax which was supposed to be paid? 163,800. Okay, no? So 163,800 is to be paid as a tax. This tax was calculated on how much total income? Come on, tell me how much total income? 11,50,000. Can you see? On 11,50,000 only this tax was calculated, no? So divide by 11,50,000 into 100. So 163,800 divided by 11,50,000 into 100, you are going to get 14.24% average rate of tax. Did you get this 14.24% average rate of tax? Now do one thing. This 14.24% on your non-monetary perquisites of 2 lakhs. Apply this. So 2 lakhs into 14.24% will be 28,480. So out of your total tax, this much tax will be treated as the tax on your non-monetary salary. Yes or no? Out of the total tax, this much tax will be treated as tax on your non-monetary salary, because we have applied 14.24%, which is the average rate of tax on your non-monetary salary. So this should be the tax on your non-monetary salary, which the employer has now promised to pay. Will he pay fully, or he will also pay monthly, small portions out of this? Yes. So divided by 12 months. So divide by 12 months, you are going to get 2373 per month. So this every month your employer will from his pocket pay this much. So definitely I am telling you, your salary, from your salary the TDS will not be 13,650, it will be less now. Now how much? Pay attention here everyone. So from your salary, how much was supposed to be deducted? 163,800 was supposed to be deducted. Yes or no? But out of that, how much tax was there on your non-monetary salary? 28,480. Yes or no? So reduce that 28,480, because that is now not to be deducted out of your salary. Employer is promising that he is going to pay this tax. So reduce it. How much you are getting it? 163,800 minus 28,480, you are going to get 135,320. Now this only this balance will be deducted out of your salary. So divided by how many months? 12 months. So divide by 12 months, you are going to get 11,277 per month. So sir, 192.1 from your salary, now this will be your TDS, and as per 192.1A, employer will pay this much from his pocket. So every month from your salary this much amount will be deducted, from employer's pocket this much will be added. Please do the total. This plus this will be 13,650 per month. So the government is going to get 1360 per month only. Hello. But earlier that entire 13,650 was coming from your salary as a TDS. Now out of your salary this much will come, and the balance will come from the pocket of the employer. Yes or no? Now pay attention. Will you get any tax credit for this amount? Tax credit for this you are going to get? Yes. And you are going to get the tax credit for this amount also. Because this is the tax on your income which is calculated and paid to the government. So the government has to give the tax credit of this income. Okay, no? But wait. This amount is fully exempt. I'm exactly talking about which amount, I'll tell you. I'm going to talk in terms of tax credit. I'm saying no. In terms of tax credit, I am talking about this amount, final amount, which you are going to claim as tax credit. Okay, no? And this amount I'm talking about tax credit. Now pay attention, this amount will be fully exempt under section 10(10)(c). For whom? For employee. For employee this will not be taxable as is perquisite. Even if it was his obligation met by employer, it will not be considered as clause 4 perquisite. 17(2)(4) will not apply on this. Why? Because it is fully exempt under 10(10)(c). And it will be disallowed under the head PGBP as per section 40 clause A subclause 5 for employer. So for employer also there will be no tax, no deduction for this amount as expense. Yes or no? And for employee, this will not be treated as taxable income, fully exempt. But later on the employee can take the tax credit of this amount, because this is nothing but the income tax of the employee paid during the previous year itself. Hello? Not by the employee but by the employer. So whenever his total income will be calculated, in his total income employee is not going to take 10 lakh rupees monetary salary. Employee is going to take the entire salary, 12 lakhs. So on his entire salary he is going to calculate the tax in the assessment year. Out of that tax, some tax is deducted, hello, from his salary, and out of the total tax, some tax is paid by the employer also, no? So that also he should get as a credit. Why would I pay this tax again? So I should get the credit for this amount also. Getting my point, everyone? So please don't forget to take the tax credit of this amount while calculating your total income and tax liability. Got it, sir? Everyone, was this easy? So likewise, there is a similar question which is given there. Illustration number 1. Mr. A, employer, pays gross salary including allowances and monetary perquisites amounting to 730, meaning that this 730 is the monetary salary to his general manager. There is a general manager who is getting 7,30,000 monetary salary. Besides, the employer provides non-monetary perquisites to him. Estimated value is 1,20,000. So 1,20,000 non-monetary salary. So total is how much? Come on, tell me. Total salary which he is going to get is 7,30,000 plus 1,20,000, 8,50,000 total salary he is going to get. But in that 8,50,000, 1,20,000 is the non-monetary salary. Everyone? Now, the general manager is exercising the option to shift out, meaning that he has told the employer that please deduct my TDS as per what rates? As per normal rates, not 115 BSE rates. Okay. And, okay. What is the tax implication in the hands of Mr. A, meaning the employer, and general manager, the employee? Okay, tax implications you are supposed to say. Simple. 7,50,000 will be monetary salary, 1,20,000 will be non-monetary salary, total will be 8,50,000. Out of that 50,000 standard deduction will go, 8 lakh will be the total taxable salary. On this, now the normal tax rates will be applied. So the tax liability will be first 2,50,000, there will be no tax, sir. Then 2,50,000 to 5 lakhs, it will be 12,500. Yes, sir. And on 5 lakhs to 8 lakhs, it will be 20%, meaning 3 lakh 20% will be 60,000. 60,000 plus 12,500, hello, will give you 72,500 plus 4% cess. So 72,500 into 4% will be 75,400. Everyone got this tax? Now, calculate the average rate of tax. Very easy to calculate. This 75,400 divided by 8 lakh. It was calculated on 8 lakh, no? So into 100. So it will be 9.425%. Where did you get this 9.425%? Did you get it? Everyone. Now, Mr. A can deduct. Please pay attention. Employer can deduct 75,400 from the salary of the general manager at the time of payment of such salary. Alternatively, employer can pay tax on non-monetary perquisites. And if the employer decides to pay that tax, then how much tax on the non-monetary perquisites the employer will pay? 9.245% of 1,20,000 will be 11,310. So out of this 11,310, if the employer will pay, so how much will be deducted? Calculate. 75,400 minus 11,310, 64,090 will be deducted out of employee's salary and divided by the number of months. For how many months the salary is given, during those months this will be deducted as salary. and divided by those months, this will be paid as what? Tax on non-monetary perquisites. Will you be able to do such things? Easy, no? Okay. Now, if Mr. pays tax of 11,310 on non-monetary perquisite, the same is not a deductible expenditure as per 40 clause A subclause 5. I have already told you. So this amount of 11,310 will not be allowed as a deduction in the hands of employer. And the amount of tax paid towards non-monetary perquisites by the employer, however, is not chargeable to tax in the hands of employee as per section 1010CC. Did we do all these things? In my question also we have done the same things, no? But what was the difference between my question and this question? Only the amounts were different. Rest every single thing is same. Hello sir. So can you get such kind of question in the exam? Yes, you can get such kind of question for 4 marks. Okay. Should we move ahead? Okay. Now see, this point number 5 I will explain. What is written in this point number 5? Okay. Pay attention over here. See, from 1st of April 2024 to 31st of July 2024, from X Limited 80,000 per month salary was received. So there is one employee who was working with X Limited from 1st April to 31st of July. Okay. So from 1st April to 31st July, from X Limited he got how much salary? 80,000 per month. Then he left X Limited and he joined Y Limited from 1st of August. So from 1st August 2024 to 31st March 2025. Okay. Now he will get salary from Y Limited amounting to rupees 1 lakh per month. Is it possible or not possible? Tell me. Now see, if he has joined Y Limited, no, so employee is having the option to tell the Y Limited that how much salary he has got earlier from earlier employer and how much TDS the earlier employer has deducted. Okay. So after taking into consideration that salary and that TDS, whatever balance tax is there on the balance salary will only be deducted by Y Limited. But for that, if you want that your new employer deducts your TDS after taking into consideration the salary and the TDS deducted earlier, then you are supposed to communicate these details to your new employer. Understanding? And if you communicate, he will consider that salary also and that TDS also which already got deducted from your salary. Okay. So now first of all tell me, in this case, will the Y Limited deduct TDS? Yes. X Limited will deduct the TDS? Yes. But how much X Limited will deduct and how much Y Limited will deduct, that you are supposed to calculate. From X Limited, whenever the salary will come, yes or no? See, earlier in the beginning of the year when you joined X Limited, tell me, when you joined X Limited, I am not asking 12.998% or something. No. Amount of TDS I am asking. So what is the amount of TDS which the X Limited will deduct and what is the amount of TDS which the Y Limited will deduct? These type of questions will come in the exam. Very easy, sir. Simple. See, from X Limited, whenever you were working in the X Limited in the beginning of the year, X Limited did not have this dream that you are going to leave in the month of August. So X Limited would have estimated your full year's salary, yes or no? So X Limited would have estimated 80,000 per month into 12 months. This will be 9,60,000. And assuming that you are not following 115 BSE, okay, 50,000 standard deduction you would have got. Everyone. So this would have been how much? 9,10,000. On that, X Limited would have calculated the tax. So 9,10,000 nil plus 12,500 plus 4,10,000 into 20% will be 82 plus 12,500 will be 94,500 plus 4%, 98,280. So the tax which they would have calculated would have been 98,280. Everyone getting this tax? Tell me yes or no. Getting this tax? No. Now this tax X Limited was deducting, but X Limited thought that you are going to work for the full 12 months. So divide by 12 months. Divide by 12. So they were deducting 8,190 per month. So can I say which X Limited deducted for April, May, June, July? 4 months. 8,190 per month they have deducted. Okay. Now from August when you will go to Y Limited. See, if you give these details to Y Limited will also consider these details. Yes or no? So assuming that you have given these details to Y Limited, so from Y Limited, how much TDS will now be deducted? For that, Y Limited will say you have earned 80,000 per month from your previous employer for how many months? 4 months. April, May, June, you have received 80. And from us, you are going to receive how much? 1 lakh per month for the 8 months, starting from August to March. So this you would have received 3,20,000. And from us, you are going to receive 8 lakhs. Understood, sir? So now tell us the total. How much is the total? 80,000 into 4, 1 lakh into 8. 1 lakh was the salary, no? Yes. 80,000 into 4 plus 8 lakh will be 11 lakh 20,000. Getting it, sir? Now tell me, 11 lakh 20, and assuming that you are not following 115 BSE, 50,000. So 11 lakh 20 minus 50,000 will be 10 lakh 70, sir. How much? 10 lakh 70. Now on that, if we calculate the tax, so the tax amount comes to 70,000 into 30%, because anything over and above 10 lakh taxable at 30%. So 70,000 into 30%, that will be 21,000 plus 1 lakh plus 12,500 will be 1,33,500 plus 4% will be there. It will be 138,840. Okay. So the tax will be 138,840. Can I say this is the 138,840? Now can I say this is the total tax? Total tax on the full year's income. Out of this, some tax is already deducted by X Limited, which you would have communicated. So how much TDS from X Limited was deducted? 8,190 per month. For 4 months it was deducted. Reduce. So 8,190 into 4 will be 32,760. Reduce that. So minus 138,840. It will be 1,06,080. Now this much tax Y Limited will have to deduct. But will it deduct from 12 months salary or the 8 months salary which Y Limited is going to give you? 8 months definitely, because Y Limited is going to give you salary for 8 months only, no? So whatever balance tax which is coming, that will be deducted in 8 months. So divided by 8 months will be 13,260 per month. Will you remember this? Okay, sir. Now if simultaneously you are working with two employers, no, so you can decide that which employer should deduct the TDS. Okay. So to that employer, you give the details of other employer that you are also working part-time with the other employer, and tell the other employer, don't deduct my TDS because your salary, etc., whatever you are giving me, no, entire amount I am, showing to my other employer, and that employer is deducting my TDS. You can do that also. Getting my point? So if salary from more than one employer is received during the previous year, then how to deduct the TDS? Okay, every employer will deduct TDS in what way, that you have understood. Okay, this is written here, point number 5, which I have covered. Okay, now forget about this point number 6. Then point number 7. See what point number 7 says. A taxpayer receiving salary has in addition other incomes. A taxpayer receiving salary has in addition other incomes chargeable to tax for that financial year may send to the employer the following particulars. What particulars? Particulars of other incomes and any tax deducted under any other provisions, yes or no, and loss if any under the head income from house property. Okay, if the assessee intimated to the employer his intent to exercise option of shifting out, then you show your house property loss also to your employer. Okay. Now see, the employer shall take the above particulars into account while calculating the TDS. But these details, no, employee cannot give in the very beginning of the year, because he might not be aware about these things in the beginning of the year. When he would come to know about these things might be in the end of the year. Okay. Maybe in the month of February or March. So in the month of February or March, what happens, that every employer will circulate a declaration form that if you all have any other incomes, house property loss, and house property loss we are asking from those assessees who are shifting out, who have told us that they are shifting out, yes or no? Because for the persons who are not shifting out, house property loss is not allowed as a set off. Everyone understanding? So those employees who have shifted out can show their house property loss also to us, and also the TDS which got deducted under other sections. If you want, in the year end, we are forwarding you a declaration form. In the declaration form, if you want, it is voluntary, not necessary to show these amounts to the employer. Yes or no? So if you want, you can give the employer these details also. And the moment you are going to give these details in the declaration form, these details will be considered, and your total income will be calculated by the employer by considering these things. And on that, the tax liability will be calculated. Yes or no? And that tax liability minus the TDS which we have already deducted earlier, whatever balance tax liability will be there, that we are going to deduct within remaining 1 or 2 months. Yes or no? So if the declaration was given, form was given in the month of February, then how many months are still remaining for you to get the salary? 2 months, no? So whatever balance tax will be there, that we are going to deduct within 2 months. So this will take care of your entire tax liability for this year. Understanding? Even the tax on your other incomes, if any, would be deducted from your salary only and will be given to the government. And you are not supposed to worry at all about other things. Just file your nil return now. For you, the return filing and everything will become easy, because your entire tax, other than salary also, your tax will be calculated by the employer only, and that tax will be deducted from your salary and will be given to the government. But for that, you are supposed to give us the declaration. But in the declaration form, what are you going to declare? Declare your other incomes. We will consider them. Declare the deductions also. Different sections deductions you get, no? ATG, ATC, ATD. So if you have made such kind of payments, etc., tell us the details of those things also. We will consider them also. Wait, LTA, etc., HRA, etc., exemptions you are getting, no? So those LTA, HRA exemptions also we will consider. But for that you are supposed to give some evidences to us. The deductions which you want to declare, for that you are supposed to give us some evidences. Proof of payments, yes or no? LTA, if you want us to consider your LTA exemption while calculating your total income, give us the proofs. What proof you are going to give? Travel tickets. The LTA which you are getting, against that the travel tickets are there. So give us the details of your travel tickets, etc. We will consider the LTA exemption. HRA exemption, if you want that while calculating your total income, we consider your HRA exemption also. Give us the detail of your landlord, how much salary you are paying him, okay, rent receipts, etc. Give us those details. Life insurance premium, mediclaim premium, ATG donations, all those things you are doing and you are declaring them. Give us the proof of such payments, payment receipts. Hello? If you will give these details to us in the declaration form, definitely we are going to consider. And by considering these things in your declaration form, we are going to calculate your total income. Show us your house property loss also. That also we are going to consider. But for that house property loss, definitely it would have arisen because of your interest on housing loan deduction. So from which bank you have taken your housing loan, what was your housing loan repayment schedule, out of that how much principal paid this year, out of that how much interest paid this year, that entire loan repayment schedule you take from the lender and give it to us. We are going to consider your house property loss also. Hello? And we are going to calculate your total income in the end of the year, maybe in the month of February or March. Okay, on that total income we are going to calculate your tax liability, and that entire tax liability will also include the tax on your salary income. No need to declare your salary income, that we already know. We will take your salary income. Just give us the details of your other incomes, other deductions, exemptions, along with proof of evidence, proof as well as evidence. Yes or no? And if you want, you can show the house property loss also. But for that also we would require the evidence of interest payment, etc. Now we will consider all these details declared by you along with your salary income. We are going to calculate your tax liability. Whatever tax liability we have calculated, that tax liability is the tax for entire year. Hello sir. Out of that, some tax we have already deducted till January, because we are giving you the declaration in the month of February. In the February, we are calculating your total income and your total tax liability for the full year. Out of this tax, some tax we have already deducted during the last 10 months till January. We will reduce that. Now, whatever balance tax will remain, no, that balance tax we will deduct in the balance 2 months, February and March. It is not necessary that every employer will circulate in the month of February only. Some employer might circulate the declaration form in the month of January also. Some employer might give you the time and they can circulate in the month of March also. Every month the declaration form will not be circulated, because the employer also has to do his business, no? And you are also supposed to work, no? So for the initial months, no, what happens from April till January, maybe in majority of the case from April to January, the same amount of TDS you will show. Every month the same amount of TDS will go. See, for example, in this case we have seen, no, every month how much was the TDS? 4030 per month. See, in the case which I told you earlier, 4030 per month, every month 4030 you will see. But in the last 2 months, 2 or 3 months, when you will see, no, the TDS amount would have become higher. Why? Because of your declaration. You have shown the other incomes also. And on your entire income, the tax is calculated. So, whatever balance tax remains, divided by 2 balance months, definitely the last 2 months TDS amount could be a little bit higher. Hello? Because that TDS includes the TDS on your salary as well as other incomes also, which you decided that it should be deducted from your salary income by your employer only and should be paid to the government. Got it, sir? Hello, sir. So this was the way in which the things are to be done. Now pay attention. To avoid the cash flow issues for the employees, the scope of section 192 1B has been extended to include any tax deducted or collected at source to be taken into account for the purposes of making the deduction under 192. Accordingly, with effect from 1st April 2024, this year the amendment has come. An employee can inform his employer for the financial year the details of the following. Now see, this same thing which you studied, no? Now they are presenting in it what? Such other incomes chargeable to tax not being loss under any other head. Or always show other incomes, and loss if you want to show us the house property loss only, that only we are going to consider. Yes or no? Any tax deducted or collected. So on your other incomes, the TDS etc. gets. What used to happen earlier, that the employer used to consider this only. See, the incomes which you are showing and the house property losses, that's it. Okay. By considering this, whatever tax is calculated, out of that the TDS which was deducted under section 192 used to get reduced, and the balance amount, full amount, used to get deducted out of your salary, balance month salary. You were telling your employer, please, the incomes which I am showing, no. Bank FD interest, this income, that income, rental income, etc. On these incomes also, there are some TDS which gets deducted. So please, in my declaration form, I am showing these TDS also, which got deducted under other sections. So employer used to say no. Government has told us to consider your other incomes details as well as deductions, exemptions details, provided you give evidences to us, as well as the losses of house property only, that's it. And now whatever tax we are calculating, out of that tax, whatever TDS we have deducted, the government has allowed us to reduce that only. Whatever TDS which were deducted under other provisions, we are not going to give you any benefit for that. Now whatever balance tax is coming, even that balance tax includes the TDS which got deducted under other provisions, used to get deducted for the second time from your salary. Getting my point? So now with effect from 1st October 2024, the government has allowed that whenever the employee gives the declaration, in the declaration, if he says that his other incomes are there, and on those other incomes under other provisions of the TDS, if the TDS is deducted and he is declaring that TDS also, employer please consider that TDS also while determining the tax liability. Got it, sir? But this will be applicable with effect from 1st October 2024. Got it, sir? So this was the new part which has come now. This is Finance Act 24 amendment. Prior to this, only point A and point C was applicable as A and B. Now one more point they have inserted. Okay. Other provisions. Now, should I move ahead? Now these details you are going to give to your employer in prescribed form and manner, and thereupon person responsible to deduct tax shall take into account the above particulars, meaning your employer will take the above particulars in account while calculating the total income and tax deductible from your salary. Okay. However, it has to be noted that on account of submission of the above details, the tax deducted at source on salary should not be reduced. Meaning that for these many months, how much TDS was supposed to be deducted? 4030, 4030, 4030. Now, after submission of all these details, the employer calculated your total income, he calculated your tax liability, he considered all these deductions and everything, loss under the head salary and all, sorry, loss under the head house property and all. And now, what happened? That your tax liability became this much. Now, out of this tax liability, some TDS which already got deducted under the from your salary, that was supposed to be reduced, and the balance amount which was supposed to be deducted from your salary, if that balance amount divided by 2 months, if this amount is less than 4030, the amount of TDS which the employer was deducting so far, if the balance month's TDS is coming less than 4030, then it is not allowed. At least deduct 4030 which you have been deducting so far. But wait, there is an exception with respect to loss from house property, allowable to the extent of 2 lakh and the tax deducted and collected at source. So because of these two deductions, what did I say? Because of these two deductions, if your final tax liability coming less divided by the balance number of months, yes or no, then at that time the TDS amount for the balance months can be less as compared to what it was getting deducted earlier. But only if the loss under the head house property is shown, or the TDS TCS under other provisions is shown, only in this case the balance tax can be less. So what exactly this means? See, I will tell you, okay, so that there is no doubt only which remains here. Okay, see, this is employee. Okay, so in the February month, February 2025, this employee gives a declaration, okay, to the employer, declaration to employer. In the prescribed form, this declaration will be given. In this declaration, what all things can be given? Come on, tell me. Other incomes. Can the details of other incomes be given? Yes. And TDS or TCS under other provisions, can that detail be given? Yes. And investments, payments, etc. for claim of what? Deduction, etc. Yes or no? Even these details can be given. Now earlier, no, TDS, TCS details which you were giving, no, the employer was not considering that. But after the amendment, even this detail the employer will have to consider. Now see, what will happen, no, in the month of February, before making the payment for February month salary, what the employer will do? Employer will consider all these details. So now the employer will calculate what? He will calculate your total income. Employer will calculate the total income of employee. Now to calculate this total income, no, total income of the employee, he will take salary given by him to the employee. He will take salary also. Wait, let me write it here. He will consider the salary which he is giving to the employee, which is not declared by the employee. Employer knows that how much salary he is going to give. So total income, when the employer will calculate, your total income, he will consider the salary which he is giving you plus other income details given by you. Getting my point? Now other incomes will be considered, and loss under the head house property can also be considered if you declare. But no other loss you can declare. Even if you will declare, the employer will not consider that. Loss under the head house property you can declare, yes or no? So other incomes, then taking the set off of loss under the head house property, then taking the deductions etc. under chapter 6A, giving you the exemptions under section 10.5 and 10.13A etc. Getting my point? Now considering all these things, the total income will be calculated. But wait, for this and this proof and evidence for payment will be required. What proofs, what evidence will be required? There is a table, I'll show you, don't worry. Okay, so show the proof, show the evidence. We will consider these also for computation of your total income. Yes or no? Now the total income is calculated. On this total income, the tax rates will be applied and tax liability will be calculated. Now out of this tax liability minus the TDS under section 192 from April to Jan, whatever TDS the employer has deducted, that will be reduced. And earlier other TDS was not allowed to be reduced from here. But with effect from 1st October 2024, now the TDS or TCS under other provisions, that also can be reduced. Okay. Now see, can you see here? Now the final tax will come. From this tax, this TDS is reduced. Now this final tax to be deducted from Feb and March month salary. This is the balance tax remaining. This will be deducted out of your Feb and March. So divide by 2. Okay. Now after dividing it by 2, the balance amount cannot be less than what it was getting deducted earlier. But wait, this can be less than what it was deducted earlier, because what is deducted? TDS, TCS under other provisions considered? Yes. Loss under the head house property is considered. Because of that, the tax liability coming less. Yes or no? And divided by 2, the amount of monthly TDS is coming less as compared to what the employer was deducting earlier. Then it is allowed. Otherwise, whatever monthly amount which will be calculated now, no, this should be at least that much which the employer has been deducting so far. Got it, sir? Sure? Done. This is your TDS under section 192. Done. Now furnishing the statement. What they are saying? Furnishing the statement of particulars of perquisite or profit in lieu of salary. See, whenever the employer is giving profits in lieu of salary or perquisites, no, so employer will have to issue a statement in form number 12BA that okay, these benefits we are giving you. These are the profit in lieu of salary. The taxable amount of these things. For example, accommodation we are giving you. The taxable amount of accommodation is this much. Motor car facility we are giving you, so motor car facility taxable amount this much. So valuation will be done by the employer only, and the perquisites and the taxable amounts, taxable value of those perquisites will be calculated by the employer, and all such details the employer will give in the year end in this prescribed format in form number 12BA to the employee. Okay, so that is a procedural requirement. Now circular, ignore this circular. Then requirement to obtain evidence, proof, particulars of claims from the employee by the employer. See, whenever you declare in the declaration form, you are claiming, no, that this is my ATC deduction, this is my ATD deduction, this much is my life insurance premium. So if you are claiming that HRA exemption should be given to you, then these evidences should be given to the employer. If you are claiming that LTA exemption should be given to you, LTA LTC exemption, then this detail should be given to the employer. This evidence should be given. Then you are claiming the deduction for interest under the head house property. Then these details should be given. Next, chapter 6A, then these details, which I have already told you, yes or no. Just remember that for this deduction, evidence of investment and expenditure, those receipts. Okay. Then interest from house property. Because of that, there is a loss. Then the details of the lender, name, address, PAN, etc. From whom you have taken the housing loan. Yes or no? How much? Repayment schedule. Definitely, if you are giving that repayment schedule, so ultimately it takes care of name, address, PAN, etc. of the lender. Okay. LTC. What is the expenditure on the travel which you are doing by taking the LTC? Then house rent allowance, details of your landlord. Understanding? And these details must, if the rent paid by you for the full year is more than 1 lakh. Without this, HRA exemption cannot be considered by the employer while calculating your total income. Got it, sir? So this is the end of 192. Now all these sections will be, they will start, they will end, they will start, they will end. All these sections are very easy. Okay. So the maximum time we had to spend in 192, which we have given, and I hope this section is understood everyone properly. Okay. Now let's come to 193. But before 193, no, see what institute has done after 192 and before 193. See, after 192 and before 193, there is some other section also which is not given here. So there is one table given behind. Okay. See, just see how many things are there. Just look at it. Just look at it. The chapter keeps on going, keeps on going. How many pages? 140 pages are there. Okay. Now, can you see this part? This is 192A. After 192, but before 193. This is 192A. Why it is given here, you know? Very easy section. Not many things are there to remember. Okay. So, in one table, no, in 12 to 13 pages, they have covered all the small TDS sections. Do you remember? See, before asking you, do you remember in salary head, I told you that RPF lump sum is fully exempt under 1012. So whenever from RPF you are getting lump sum, employee, are you getting lump sum from RPF? Yes. That entire lump sum is fully exempt under section 1012. But in certain situations it will be exempt. If continuous employment of 5 years or more, then you are getting lump sum fully exempt. But if the continuous employment of 5 years or more is not there, less than 5 years is there, then also it will be exempt. Because you are leaving the employment because of a reason which is beyond your control. Yes or no? Or you are leaving the employment because of any other reason, and reason is in your control. Still you are leaving. Then do one thing. Don't take this lump sum in your hands. Get it transferred to your new employer. Then also it will be fully exempt. Or do one thing, even if you are not taking a new employment and you are not getting transferred to your new employer, get it transferred to your NPS account, then it will be exempt. In all these cases, no, lump sum received on RPF will be exempt. But if the lump sum is received from RPF and you are not covered by any of these situations, that means within 5 years you have withdrawn your money from your RPF, premature withdrawal. What do we call it? Premature withdrawal will be taxable in the same manner in which the lump sum of UPF is getting taxed. 4 parts. Out of that lump sum, employee's contribution coming back, not taxable for him. But the employee's contribution, interest, will be taxable under the head IFOs. Do you remember? Then employer's contribution and employer's contribution interest will be taxable under the head salary. So don't you think that in the lump sum, entire amount is not taxable, but some amount is taxable in that lump sum? So whatever premature withdrawal you are doing from RPF, whatever premature withdrawal you are doing from RPF for which you are not getting any exemption under 1012, getting my point? Meaning that premature withdrawal is taxable for you. But that entire premature withdrawal is not taxable. Out of that, employees' contributions so far will be ignored. That is not your income only. But the balance part is taxable. No, balance 3 amounts is taxable. Interest on employees' contribution, employer's contribution and interest. That taxable amount we are talking about. On that taxable amount also the TDS will be deducted. 192A. At the time of payment. CP1, do you remember CP1, CP1? Go to CP1, common point 1. In the common point 1, fill in the blanks. TDS is deducted at the time of payment in case of salary under section 192 and under section 192A also at the time of payment of premature withdrawal. Getting my point? Now who is going to give this payment? Come on, tell me. Who is going to give this payment? Definitely the trust which was created to maintain this RPF. Yes or no? Meaning on behalf of the employer, that trust is going to make this payment, no, from RPF. Hello. So the payment will be given by the trustees. Trustees of the provident fund will give you the payment of this lump sum. Now that trustee giving you this payment, what is the payment? Premature withdrawal. Who are you? Who are you? You are an employee, individual employee. So do you know who is the payer? Come on, tell me, who is the payer? Trustees of provident fund. Trustees of provident fund. Making what payment? Premature withdrawal from RPF account. Yes or no? This payment is covered by 192A. This payment is made to whom? Made to an individual employee. That employee may or may not be a resident. Resident as well as non-resident. He can be any type of employee. Yes or no? And if the premature withdrawal is more than or equal to 50,000. So whatever amount which you are receiving, total premature withdrawal, I am talking about total amount which is coming from that RPF account, total lump sum amount. If that is 50,000 rupees or more, then 192A says that on that amount the TDS will be deducted at what rate? 10%. But that TDS will not be deducted on the entire amount coming to you. It will be deducted on the taxable amount. Total amount coming is 1,50,000. Is it more than 50? Yes. TDS will be deducted. Now TDS will not be deducted on the total amount because in that total amount all the amount is not taxable. Whatever is the taxable amount, excluding employees' contribution, the entire amount is taxable, no? On that taxable amount, that is your income, on that only the TDS should be deducted at the rate of 10%. Got it, sir? So 10% on the premature taxable withdrawal. 10% on the taxable withdrawal. And this 10% on the taxable withdrawal, even if this amount is less than equal to 50, will not make any difference. Because the total amount coming is 50,000 or more. If the total amount coming is 50,000 or more, then on the entire taxable premature withdrawal, the TDS will be deducted at 10% at the time of payment. And see, exemption from TDS, if in all these cases the premature withdrawal is done, sir, in that case that is fully exempt under 1012, that is not known as premature withdrawal. So if the RPF balance is coming in these situations, then that RPF lump sum is fully exempt. No, I have already told you. So the amount which is not liable to be taxed in your hands, the amount which is fully exempt in your hands, on that amount, how come the TDS will be deducted? No TDS will be deducted. But if you are not covered by these situations, definitely the premature withdrawal will come, and on that premature withdrawal, definitely the TDS will be deducted. But not on the entire amount, it will be deducted on the taxable amount. But for that, the total amount should be coming 50,000 or more. Got it, sir? This section is not that much important, but still, remember, all these sections which we are doing earlier, 5 star, 5 star, 5 star. Salary, very important. This, okay, not that much important, but if you'll read it once, you'll understand, no? You'll remember 192A. Did you remember this? Will you remember this? Now see, 193 is there. After 192, 192A is there. After 192A, 193 is there. But wait for some time. 193, 194A, we are doing together. But before that, 194 will come. What will come? 194. Can you see here 194? So whenever we do some sections, no, with those sections, we do other sections also. Along with 194, also cover. What did I say? Along with 194, also cover 194K. What is the difference, 194 talks about dividend on shares and 194K talks about dividend on units. Sir, 194 talks about dividend on shares and 194K talks about dividend on units. If you are a payer, who is a payer? Come on, tell me. Domestic company. Or for 194K, it will be UTI or mutual fund. So who is the payer? Come on, tell me, guys, who is the payer? Domestic company is the payer. And who is the payee? Payee is any resident shareholder. This is the first section where they are saying that the payee must be a resident. Payee must be a resident. If the payee is not a resident, then the TDS will not be deducted as per 194. The TDS deduction will happen as per 195. Any payment made to non-residents, on those payments the TDS are deducted as per 195 provisions, which is not there in your syllabus, which you are going to learn in final CA. Yes or no? But right now we are talking only about those payments of dividends which are given to resident shareholders. So if there is a resident shareholder and to that resident shareholder, this domestic company, single domestic company giving to his single resident shareholder, total amount of dividend during the year, more than 50,000. Total dividend coming from this. See, become a company and think as a company. You are a company? Yes. To your one shareholder during the year, if the aggregate dividend you are going to pay to that shareholder more than 5,000, then on that entire dividend you are supposed to deduct the TDS. That is what 194 says. At what rate? 10%. Now when are you going to deduct the TDS? Before making payment by any mode, or before making distribution or payment of dividend. So this dividend is deducted, this payment TDS is deducted at the time of payment or distribution, as the case may be. Whenever the dividend will be paid, whenever the dividend will be distributed, as the case may be. Because see, this TDS is not deducted only on interim dividend, only on final dividend. It is going to be deducted on all the dividends, whether interim, whether final, whether deemed dividend under 222A to 222F, all the dividends. So during the previous year, a domestic company has given whatever dividend to its shareholders. What shareholder? Any resident shareholder. Okay, so become a company and think that so many shareholders are there. To all the shareholders? No, single shareholder. To that shareholder during the previous year, whatever dividend you are paying, interim dividend, deemed dividend or final dividend, take the total of that. If that aggregate dividend paid to that shareholder in a financial year by you is more than 5,000, then 100% on the entire amount of dividend paid by you, the TDS will be deducted. The TDS deduction will be at the rate of 10%, but it will be deducted at what time? At the time of making that payment of dividend or distributing the dividend, as the case may be. Understanding? Now, exception, important. Please check. Exception is dividend credited or paid to LIC, GIC or subsidiary of GIC or any other insurer. Okay, provided the shares are owned by them or they have full beneficial interest in such shares. So, what I am telling you here, pay attention. Dividend is paid or credited to LIC, GIC, subsidiary of GIC or any other insurance company, meaning that they must be investing in one company or many companies. Many companies, because they have huge amount of monies. So just imagine if they have invested their huge amount of money in n number of companies and becoming a shareholder. So all the companies will now give dividend to one person, LIC. So all the companies are required to deduct TDS. No, you all don't deduct TDS. We are going to collect the tax on dividend from them only. In this case, the TDS will not be deducted. If the shareholder is LIC, GIC, any subsidiary of GIC or any other insurance company. Yes or no? Or any other person may be notified by the CG. So as of now, there is no other person notified. Only these persons are notified. Yes or no? So who should be the shareholder? Come on, tell me. Shareholder is LIC, GIC, subsidiary of GIC or any other insurance company holding the beneficial ownership of the shares, meaning they are the shareholder in that company. So if that domestic company is paying the TDS to these type of shareholders, then that domestic company is not liable to deduct TDS under 194. 194 provisions are not applicable. Yes or no, sir? Will you remember, sir? See. Amount of rupees 5,000 is given, no? Pay attention, huh? Amount of 5,000 in case of dividend paid credited to individual shareholder. What did I say? Individual shareholder. So if the shareholder is an individual shareholder, okay? So by any mode other than cash, then no threshold in other cases. Other cases, there is no threshold. Okay. Other cases, whatever dividend given, full TDS will be deducted. 5,000 limit is applicable only if the dividend is given to individual shareholder. Yes or no? Now, along with 194, we are supposed to do 194K also, no? So go to 194K. See, now read this part. You will understand. Income on units other than in the nature of capital gains, meaning that, write down, units. Income on units means dividend on units. The income which you are getting by holding the units, not by selling the units. So by selling the units, you are going to get capital gains income. No, on that, no TDS is liable to be deducted. Holding the units and you are getting regular flow of income in the form of dividends, that you tax under the head IFOS, just like your dividend on shares. Yes or no? So if the amount is greater than rupees 5,000 in a financial year, see, now this limit is not applicable only for individual, it is applicable for all. Okay. So if the dividend on the units for the full year is more than 5,000, then that mutual fund or the UTI become a mutual fund, become a UTI to one unit holder. To your one unit holder, total dividend paid by you on the units during the year If it is more than 5,000, then from that shareholders dividend you are supposed to deduct TDS. At what rate? 10%, provided that shareholder is a resident shareholder. Who will deduct the TDS? Any mutual fund or administrator of the specified undertaking, specified company. Understand, this is a UTI or a mutual fund. That's it. No need to apply mine. Write down UTI or mutual fund, giving the dividend on units to any resident person. Is there any exception, sir? No. And at what time the TDS will be deducted? At the time of credit or payment, whichever is earlier. See, it is written at the time of credit or payment, whichever is earlier. Will you remember this? Sure. Now this was your 194K. So 194K. What is the difference? What is the difference? Domestic company dividend to shareholders, resident shareholder. TDS will be deducted 10% at the time of payment or distribution, as the case may be. Hello. And what is the rate of TDS? 10% rate. TDS will be deducted in all the cases. But if the dividend is given to a resident shareholder who is an individual, then the TDS will be deducted only if the payment of dividend is more than 5,000. Getting my point? For others, there is no such restriction. For 194K, if the mutual fund or UTI is giving dividend on units to resident unit holder, unit holder can be any person. If the payment of dividend is more than 5,000, then that UTI or mutual fund will deduct TDS at what rate? 10%. Okay, at the time of payment or credit, whichever happens earlier, 194K, and there is no other exception over here. Will you remember? Now, coming to section 193. We have completed how many sections? 192, 192A, 194, 194K. Okay, no? Now, come to 193. Interest on security. Very easy. Very easy. Securities means what? See, it is written over here. Don't apply your mind. Don't apply your mind. Please write down bonds, debentures, or government securities. Any bonds, any debentures, any government securities. Yes or no? They are securities. So now tell me, who will be issuing them? Companies, big institutions, they will be issuing these bonds, debentures, or even the government can issue the government securities. RBI can also issue the government securities. Yes or no? So can I say there is an issuer of these securities? Issuer can be any person. Yes or no? Issuer can be any person issuing these securities. Now these securities are issued to whom? Issued to any resident person. Any resident person who is the investor, who must have invested in these securities. Getting my point? So now tell me, as an investor, if someone has invested in your securities, are you going to pay that investor an interest? The answer is yes. Because he has invested in your securities which you have issued. Yes or no? So your debentures he has purchased, your bonds he has purchased, or you are a government. So your government securities he has purchased. But that investor must be a resident. Huh? Remember, what if that investor is non-resident? What if that investor is non-resident? Then will there be any TDS? Yes, there will be a TDS, but not as per 193. The TDS provisions are different. Yes. 194, 194K, dividend on shares, dividend on units, paid to resident. 194 and 194K will be applicable. If those dividends are paid to non-resident, then 194K will not be applicable. Other provisions are getting applicable. 195. Here also it will happen. Other provisions will be applicable. But the TDS will be deducted in that case also. Huh? Please remember, if the question tells you that the payment is made to this non-resident, interest payment is made to this non-resident, you will say no TDS will be deducted, you are gone. Gone. You are supposed to say TDS will be deducted, but not as per the provisions of section 193. There are different provisions. Got it, sir? So we are talking about whom? If the payee, the person receiving this interest is what? Is a resident person, any resident person who is receiving what? Interest on these bonds. So interest on these bonds, debentures, government securities, whatever interest you are getting, no, on that entire interest, the TDS will be deducted at what rate? 10%. That's it. And when the TDS will be deducted, at the time of payment or credit, whichever happens earlier. The TDS is not going to be deducted at the time of payment. It will be deducted at the time of payment or credit, whichever is earlier. So in my books, whenever I have given the credit or whenever I will make the payment, whichever is happening earlier, at that time the TDS will be deducted. That's it. Will you remember this? At what rate? At what rate? 10%. Now, there are two most important exceptions. Very important. Huh? Exception number 4, 5 and 6. We are going to see 4, 5 and 6 first. Okay. Now before that, pay attention. Last one, 6th. Read that 6th one. YKT. Just like dividend on shares, interest on securities also, if paid to these security holder, there it was a shareholder, now they will be the security holder, investor. So if the payee means investor, if the payee, or you may say investor, is LIC, GIC, subsidiaries of GIC or any other insurance company, and if the company, government, etc. paying interest on securities to them, then there will be no TDS. Reason they have huge money, they would have invested in the securities of n number of companies, so everyone will deduct the TDS, so the government will have to run behind everyone to recover that TDS. So you all please don't deduct TDS, we are going to take the tax on their income from them directly. Okay, so no TDS will be deducted here. First point, very important. Next one. Now see, the debentures, whether listed or not, issued by the company in which the public are substantially interested to a resident individual or HUF. All these conditions must be fulfilled. Huh? So can I say now they are talking about the interest on debentures of a public limited company. So any interest on debentures, whether listed or unlisted, of any public limited company, that interest is paid to any resident individual or HUF, then on that interest there will be no TDS up to 5,000 rupees per annum. So 5,000 rupees limit is given only for this interest. Okay, so up to 5,000, should not exceed 5,000. Yes or no? Provided this interest is paid by way of account pay check the company to the individual or HUF. See, this interest less than equal to 5,000 and paid by way of account paycheck. If all these conditions are fulfilled, all, then there is no TDS. Even if it is interest on securities, no TDS. 193 not applicable. But wait, any single condition not fulfilled, entire interest as per 193 TDS will be applied. What if the interest is given to any other security holder? Resident firm, resident company. Then you are not supposed to see all these things. Directly deduct TDS 193. Hello? What if it is given to resident only? Amount is 5,000 or less. Hello? But it is paid in cash. Then also there will be TDS because it is not paid by way of account paycheck. Hello? Getting my point? What if it is not on debentures, it is on some other security? Then also the TDS will be there. TDS will not come only if interest on debentures is given by a public limited company to a resident individual or HUF in by way of account pay check and the amount is 5,000 or less. 5 condition, 5,000 or less. Then there will be no TDS. Yes or no? This is important point. They have tested this point few times in the exam. Okay. And do you remember in one of the questions in total income, this point also came. Interest on debentures. On that the TDS was deducted and at the time of calculating the tax liability, we took the tax credit of this TDS also. 6284 or something like that. The amount of net interest was there. And from that, the TDS was either 7540 or something like that. The gross amount was coming. So in your computation of total income also, this point was exploited. So be very careful, huh? Okay. Next one. See, this point number 5 is important. See, all the points which I am discussing with you now in detail, in properly, you are supposed to remember all those points properly, huh? Now, coming to point number 6, even point number 4, even this point is very important. See, if you have any government securities, no, central government security, state government security, on that whatever interest will come, any amount, there will be no TDS. So first of all, that interest on government securities is taxable for you. If the government security is not specified under 1015, hello, there are certain government securities which are specified in 1015, forget about those. But in all the cases, the government securities, if you are investing, interest you are getting, that interest is taxable for you as your IFOS income. But don't worry, since it was a government securities, no, whatever interest is coming, full amount will come, show it taxable under the head IFOS, no problem. Understanding? No TDS will be deducted, whatever amount of interest will come. But if the government securities is what? It is 8% savings taxable bonds 2003 or it is 7.75% savings taxable bonds 2018 and with effect from 1st October 2024 they have introduced one more name, floating rate savings bonds 2020 or any other notified security of the CG or SG if such interest payable exceeds 10,000 during the financial year. So you have to remember these three names. 8% savings taxable bonds 2003, 7.75% savings taxable bonds 2018, floating rate savings bonds 2020 taxable, floating rate savings taxable bonds 2020. On these type of bonds, these are also issued by the government, central government, hello, or any other notified CG or SG security which is not yet notified. Only these three are notified as of now. Yes or no? If on these type of securities you are getting interest during the year and that interest is 10,000 or less, then there will be no TDS. But on these securities, if the yearly interest, annual interest received by you, if it is more than 10,000, then on that entire interest, the TDS will be deducted. For them, the limit is 10,000. For debentures, interest, the limit is 5,000. And that limit is only applicable if individual HUF is there. See, 10,000 limit is not applicable only if it is received by individual HF. No, it can be received by any person. Yes or no? It will be, there will be no TDS if the amount is 10,000 or less for the full year. And if the interest is more than 10,000, then definitely there will be TDS. For other securities, no, for other government securities, there is no 10,000 limit. Any amount of interest you get, there will be no TDS. There is an exception. Got it, sir? So please remember, because this time there is an amendment here. So they can ask you floating rate taxable bonds, savings taxable bonds, yes or no? 2020. Okay. Now pay attention. All these, one, national development bonds, you are getting any interest, no TDS will be deducted. 7-year NSC, which was the fourth issue of the NSC, on that whatever interest is coming, that will also not be liable for any TDS. And debentures issued by any institution or authority or any public sector company or any cooperative society, including a cooperative land mortgage bank or a cooperative land development bank, as notified by the CG. Can I say notified debentures of any institution, authority or any public sector company or any notified cooperative society? Okay. So on these bonds or debentures, there will be interest, but no TDS will be deducted. Now, which bonds and debentures they have notified? See, which companies? Central government in 2018, they have notified Power Finance Corporation. Do you remember PFC? Bonds of NHAI, bonds of RECL, bonds of PFC, bonds of RECL, bonds of IRFC. You acquire, you invest in those bonds, your capital gain, long-term gain of immobile property gets exempted under 54EC. So on that investment, bonds will come, you are going to get exemption under 54EC. But wait, on those bonds, whatever interest also you are going to receive, Power Finance Corporation or IRFC, okay, no, whatever interest you are going to receive on those bonds, that interest will not be liable for any tax deduction under 193. There will be no TDS. Meaning that, is that interest taxable? The answer is yes or no. No. If you can see 10-15, the exemption is given for this interest also. So bloody the interest is not taxable only. Then why to deduct the TDS on these interest? Getting my point? So there will be no TDS. Got it? Out of these exceptions, which all exceptions are most IMP? 4, 5 and 6. Please remember 4, 5, 6. Okay? So 194A. 194A. Interest other than interest on securities. Interest other than interest on securities. Now, can you give loan to someone? On that, will you get interest? On that interest, TDS will be covered here. So that party who is giving you that interest, the borrower who is taken loan from you, hello, he will give you the interest, no? So he will deduct TDS as per 194A because he is giving you interest which is not interest on securities, other than interest on securities. Yes or no? Next one. Can you deposit your money in the bank? Fixed deposits, etc. On that fixed deposits, etc., will the bank give you interest? Bank will deduct TDS under this section. All the interest will be covered by 194A. All interest. Yes or no? Any interest other than interest on securities will be covered by 194A. Now see, any person, what did I say? Any person can give interest other than interest on securities. To whom? To whom? To any person, but that person who is receiving must be a resident. It is very important. the payee must be a resident payee. Only then the provisions of 194A will be applicable. Done, sir? But wait. Now can you see there is a person over here? So now there is one exception in the payer also. There is one exception in the payer also. Now, did I tell you that I will tell you the common points? CP. Now in the CP, I will write down the second common point. Because in 5 to 6 sections, this same explanation is going to come. Okay. So I'm not going to explain this again and again. Once and for all those 5 points I'm discussing right now only. Yes or no? So pay attention. See. If the payer, this is CP2, no? Common point 1 I have already done. This is CP2. Common point 2. See, if the payer is making the payment. Now which payment he is making? The payment which is covered under section 194A, 194C, 194 E, F, G, H, 194I, 194J or 194R. Any of these payments if the payer is making. Now see, in 194A, what payment is covered? Interest, other than interest on securities. 194C, contract fees is covered. Payment of contract fees. 194H, commission or brokerage. 194I, rent is covered. Rent for properties, rent for assets, yes or no? 194J, professional fees is covered. No need to write. You are going to see all these sections. Okay, now 194R, the perquisites which are given in the course of business or profession. So a businessman is receiving perquisites in the course of business or profession. So for you, it is your PGBP income. Yes or no? So the person who is giving you this perquisite will deduct TDS 194R. Understanding? So if these payments are made to resident payee, and that resident payee can be any person, right? No, but this payer, no, payer is an individual or HUF whose last year business turnover was not more than 1 crore or professional gross receipt was not more than 50 lakhs. Then this type of payer is exempted from the provisions of 194A, C, H, I, J and R. So even if you are making such payments, even if the threshold and everything is crossed, don't worry, this year you are not liable to deduct TDS because your last year's turnover was not more than 1 CR. Last year's gross receipt was not more than 50 lakhs from your profession. Yes or no? So if you are an individual or HUF and you are making such payments to a resident person, yes or no, then you will be liable to deduct TDS in this section in this year only if your last year's business turnover was more than 1 CR. Your last year's gross receipt was more than 50 lakhs from your profession. Got it? All the other payers, this exception is not applicable. This is applicable only if the payer is a individual or HUF. Understanding? And see, this exception will not apply to all the payments. So now they can give you are an individual. You are an individual. Your last year business turnover was not more than 1 CR. It was only 80 lakhs. And this year you are making a payment to your resident employee salary. Will you be liable to deduct TDS? Yes. They are under 192. Any employer, including they are also covered. Hello, sir. There did I tell you under section 192? Did I tell you? And have I written that payment under 192 will also be covered for this exception? No, only these payments will be covered. So if this individual or HUF is making any other payment, no, he will be definitely liable to deduct the TDS if he is getting covered under that provision. Hello. But this type of individual or HUF making these payments in the current year to any resident person, then this individual or HUF is not liable to deduct these TDS. Other TDS he is liable to deduct. Getting my point, sir? So deliberately they will put you in trouble by giving such things. Will you remember this, sir? Everyone. So right now we are doing which section? 194A. And after this, we will go to 194C. There also the same exception is applicable for payer. When we will go to 194H, there also the same exception is applicable. 194I, 194J, 194R, everywhere if the same exception is applicable, so this exception is going to come for 6 sections. Why to discuss this 6 times if I can discuss it only once? So whenever these payments will come, no, be very careful. Payer can be any payer making these payments to any resident. The payer will be liable to deduct TDS as per these sections, okay, provided he is any payer other than this individual or HUF. Got it, sir? Sure. So now 194A. 194A says that you are a person. Now pay attention. However, an individual or HUF whose total sales or gross receipt or turnover from the business or profession carried on by him exceeds 1 crore in a business or 50 lakhs in case of profession during the immediately preceding financial year is liable to deduct TDS if it exceeds. If it exceeds, meaning that if the business turnover last year was 1 crore or less, if the profession's gross receipts during the last year was 50 lakhs or less, then such type of individual or HUFs will not be required to deduct this TDS this year. Wait, the turnover and the gross receipts for the last year we are supposed to check. If in the last year the turnover or the gross receipt did not cross 1 CR or 50 lakhs, then this year whatever payment of interest he will make, he is not going to deduct any TDS under 194A. Even if this year's turnover is more than 1 CR, even if this year's turnover is more than 50 lakhs, he is not going to deduct TDS in this year. Because last year's turnover, last year's gross receipt was not more than 1 CR or 50 lakhs. Getting my point? Hello, sir. So any payer other than such individual or HUF, okay, giving what? Interest to whom? To any resident person. As per 194A, the TDS will be deducted. At what rate? The rate of TDS is 10%, sir, 10%. And when the TDS will be deducted, at the time of payment or credit, whichever happens earlier. At the time of payment or credit, whichever happens earlier. So, who is the payer? Did you understand? Who is the payee? Did you understand? What type of payment is covered? Did you understand? What rate is TDS? 10%. Did you understand? And when the TDS will be deducted? At the time of payment or credit, whichever is earlier. Now there are certain exceptions. What did I say, sir? Exceptions. So non-applicability of TDS under 194A. Each and every exception which I will discuss is important for you. Because 194A, there are many exceptions, okay? And any of these exceptions they can exploit in the exams. Understanding? Sure. So pay attention. 194C talks about interest. Interest other than interest on securities. If during the previous year, become a payer and think. During the previous year to a resident person, are you giving interest amounting to rupees 5,000 or less? Yes, no need to deduct TDS. You are liable to deduct TDS only if the amount of interest paid by you, paid or payable by you during the previous year is more than 5,000. So definitely the limit is 5,000. Yes or no? Up to 5,000. Will you deduct any TDS? No. TDS is required only if the interest is more than 5,000 for the year. Then on the entire amount of interest the TDS will be deducted. But wait, somewhere this limit is 40,000 also. So instead of 5,000 the limit will be 40,000 if the interest is on time deposits which you have kept with any banking company, cooperative bank or a post office. So if with a banking company or a cooperative society, cooperative bank or any post office, you are keeping time deposits. What you are keeping, sir? Time deposits. 40,000 were the payer in respect of any deposits under notified scheme, and from the banking company or a cooperative bank on the time deposits. So time deposit means what, you know? Time deposits, fixed deposits, or even the recurring deposits which are repayable after a certain time. So time deposits, write down time deposits is equal to fixed deposits or even the recurring deposits repayable after a prescribed or specified time. So do you have FD in a bank? Yes. Do you have recurring deposits repayable after some time in a bank or a cooperative bank? Yes. On that, whatever interest for the full year you are going to get, if that interest is 40,000, more than 40,000, then only the TDS the bank will deduct or that cooperative bank will deduct. Yes or no? Or see, if you are a senior citizen, then this 40,000 limit will be taken as 50,000. Meaning, from a bank, if a senior citizen is getting 50,000 or less, then there will be no TDS. From a bank or a cooperative bank, if the senior citizen is receiving interest more than 50,000 in a year, then only the bank or the cooperative bank will deduct the TDS. For others, it is 40,000. But wait, all the other interest other than this one, the limit is not 40, limit is not 50, limit is 5,000 only. Getting it or not? Now tell me, there can be post offices also where you can deposit money in notified schemes. Now which are the notified schemes in the post office? Senior citizen savings schemes, and the other one is inserted with this year onwards. Mahila Samman Savings Certificates. So notified schemes of post office. Okay, notified schemes of post office. Two schemes are notified. One Mahila Samman Savings Certificate, and the second one is Senior Citizen Savings Scheme in the post office. So from this scheme also, from these schemes also, if you are going to get interest, no TDS will be deducted up to 40,000 or 50,000 interest. Yes or no? Hello. Now see, the limit which you have to see, 40,000 or 50,000 limit which you are seeing, no, you are supposed to see that limit branch wise. What wise? Branch wise. Meaning a single branch of the bank or single branch of a cooperative bank giving you interest up to 40, up to 50 will not deduct TDS. But if that branch is giving you interest more than 40, more than 50, that branch will deduct the TDS. But this is applicable only if the bank has not adopted CBS, Core Banking Solution. Do you remember this Core Banking Solution? There might be something like this in your study mat also, in your SM syllabus and all. Yes or no? Core Banking Solution is a software which connects all the branches of the bank, and this software gives the entire control in the hands of head office. Head office sitting at one place, you can know all the deposits in all the branch, total amount, all the loans given in all the branches, total amount, total interest, total interest payable, total interest receivable, yes or no? So the banks which have adopted core banking solution, for those banks, the deduction for TDS under 194A will not apply branch wise, it will apply bank wise. Meaning that I am having one FD in SBI, Chennai branch. On that FD, I am getting 30,000 interest. Is it more than 40? No. No TDS will be deducted because this branch is not giving me 40. Yes or no? Not giving me more than 40. Now another branch is in Ahmedabad. SBI bank, same bank, another branch is in Ahmedabad. That Ahmedabad branch is also going to give me 35,000 interest. Will that branch deduct TDS? No. If I see branch wise, there is no requirement of TDS. But can I say both the branches are of the same bank? And this bank has adopted CBS. SBI has adopted CBS. So from this bank, from all the branches taken together, whatever interest is coming on that, the TDS will be deducted. So now the limit of 40,000 will not be seen branch wise, now it will be seen bank wise. So from this bank, from all the branches taken together, total interest is 30 plus 35, 65. Is it more than 40? Yes. So now the bank will instruct both the branches to deduct TDS and give the interest, because bank wise the limit of 40 or 50 is checked. Everyone, did you understand this? Sure. So see, usually the limit of 40 or 50,000 will be seen branch wise, but if the bank has adopted core banking solution or a cooperative bank has adopted core banking solution, then in such cases the limit of 40 or 50 will be checked branch wise, no, bank wise. Got it, sir? Everyone. Now see, this point you ignore, no need to do. Okay, now come to the second exception. Did you learn the first exception? Any interest other than interest on securities, the limit is 5,000. Till 5,000, no TDS. If the interest is more than 5,000, only then the TDS will be deducted. Yes or no? Hello. But if the interest is on time deposits account from a banking company, cooperative bank, yes or no, on that the limit is 40,000. And if that interest is given to the senior citizen, then the limit is 5,000. And if the interest is coming from post office notified savings account, savings deposit account, then 40 or 50 for that also. Getting my point? The limit of 40 or 50 will be checked branch wise and not bank wise. But if the bank has adopted the core banking solution, then the limit of 50 or 40 will be checked bank wise and not branch wise. Okay? Total aggregate interest from that bank will be liable for TDS. Okay? Now, interest or paid or credited by firm to any partner. If any firm is giving interest to the partner, on that there will be no TDS. Exception. Okay. Next one, interest paid or credited in respect of deposits under any scheme framed by the central government and notified by it, notified schemes of central government. So if you have invested in the notified schemes of central government, if you have invested in the notified schemes of central government, deposited. So deposits which you have made in the notified schemes of the central government, on that deposits also there will be no TDS. Okay. Next one, interest income credited or paid in respect of deposits other than time deposits made on or after 1795 with a bank to which the Banking Regulation Act applies. Wait, they are writing other than what? Time deposits. Other than time deposit is demand deposits, which is savings account, that is interest on savings deposit account. On that also there is no TDS. Please remember this. On savings deposit account there is no TDS on the interest. Do you have a savings account in the bank? Have you checked the passbook? Have you checked the passbook? Go and check the passbook today. or go and check the bank statements, every quarter no, the interest will be credited. That whatever interest for the full quarter will be there, will be credited fully. There will be no TDS deducted from this. Why? Because of this point. So bank will give you the interest on the savings deposits which you are having with them. Yes or no? But since it is not a time deposit, it is a demand deposit. So on this deposit, whatever interest the bank is going to credit every quarter, on that there is no TDS. Yes, 2.7% is peanuts. So don't keep it in such a bank. No. See, AU Small Finance is giving good rate of interest on savings. If you will go to Yes Bank also, it is also giving good rate of interest. But see, instead of keeping your money idle in the savings account, no, you should be investing it somewhere proper places so that you get good returns. Just imagine for the full year, 2.7% per annum interest rate is nothing. It is peanuts. Even the peanuts are costlier than this. Getting my point? So now point number E. Income paid or credited by a cooperative society other than cooperative bank to a member, or to such income credited or paid by a cooperative society to any other cooperative society. So one cooperative society giving interest to another cooperative society, or a cooperative society giving interest to any of its members, then there is no requirement of TDS on this interest also. But remember, the cooperative society which is giving the interest should not be a banking cooperative society, should not be a cooperative bank other than cooperative bank. So any cooperative society other than a cooperative bank giving the interest to any of its members, yes or no, is not required to deduct any TDS on the interest given to its members. Or if the cooperative society is giving interest to some other cooperative society, then also the cooperative society giving the interest should not deduct any TDS, because the interest is given to any other cooperative society. But now see, interest income credited or paid in respect of deposits with primary agricultural credit society, primary credit society, cooperative land mortgage bank, or a cooperative land development bank, or any deposit other than time deposits with a cooperative society, other than a cooperative society or a cooperative society or a bank engaged in carrying on the business of banking. Okay, now see, all these points are time pass points. Just remember one thing, that interest on these deposits which are made with any cooperative society, which type of cooperative society? These type of cooperative societies. Usually you find such type of cooperative societies in villages, small villages, small towns, where these deposits will be very small deposits, which will be kept by very small farmers, very small people working. So in these small towns and villages, whatever small people are there having their small savings which they are depositing here, will be a very small deposits. On that the interest will be very small amount. On that we are not telling you to deduct any TDS. Please don't deduct any TDS. So if these societies are giving interest on the deposits which they have taken, yes or no, these societies are not going to deduct any TDS on the deposits maintained by them, because with these type of societies the deposits will be maintained will be for very small people. If on those deposits also the TDS is deducted, no, unnecessarily what will happen, those small people will have to unnecessarily file their return of income to get that refund of that TDS. Getting my point? It will be a problem for those depositors. So hence no requirement. The same reason is for other cooperative societies also. Yes or no? So please remember this much only, that is sufficient. Okay. Now see. Now from the combined reading of E and F, it can be inferred that cooperative bank other than mentioned in one above is required to deduct tax at source on payment of interest on time deposits to its members. That we already know. Okay, no, we have already seen in the first point. However, it is not required to deduct tax from payment of interest on time deposit to a depositor being a cooperative society. This was covered here, no? If cooperative society other than a cooperative bank to a member, if the interest is given, no need to deduct any TDS. But if it is given to any other cooperative society, then also it is not required. So even if it is a cooperative bank or a non-cooperative bank giving the interest to other cooperative banks, no requirement of TDS. That same thing they are, writing again and again. So this entire point, point number E, even if you leave this point in option, then also it is okay. Okay. And if you can read it, just read it once or forget. Understood? Whatever important points are there, we are discussing. But if we find these things to be stretching the section unnecessarily, trust me on this section, they don't ask on a, they have never asked this particular point, and it is very rare that it should come. And even if you are, feeling that, okay, this will come, what? So read it only once. No need to spoil your time here in this point at least. Getting my point? Next one. Okay. Till here, read only once. Read only once. Till here. Now point number G. Interest income credited or paid by the central government under any provision of the Income Tax Act. Please write down. Interest on income tax refund is the best example for this. So as per the income tax provisions, the central government is giving interest to someone. See, usually the government takes the interest if you delay in filing the return, if you don't deposit the amount of advance tax, if you do the default in payment of advance tax installment, usually the government will take interest from you. This point is saying no. Now the government is not taking interest from you. Government is giving interest to you as per the provisions of Income Tax Act. So when the government usually gives you the interest as per the provisions of Income Tax Act, whenever there is a refund of income tax due, so at the time of giving that income tax refund, the interest will also come. That refund will not be treated as your income, ignore. But that interest will come, that will be taxable as your IFRS income. Do you remember? But on that, the government is not going to deduct any TDS. Okay, remember this point. Now next one. Interest paid or credited to following entities. Write down payees. If any of these payee is there, interest is given to these payees, there will be no TDS. Just imagine, one bank is giving loan to thousands of people. Now thousands of people will come and give the interest to bank. So what these people will say? See bank, for you, we are the source of income. We are the payers giving you interest. So we all will deduct the TDS. So now the government will run behind all those, borrowers that you have deducted the TDS from the interest income of the bank. Now give us the TDS. So if the interest is paid to any bank, please don't deduct TDS. We will directly take the tax from the bank. You all please, you don't deduct the TDS. Getting my point? Then any financial corporation, any bank, cooperative bank, then Life Insurance Corporation of India, company and cooperative society carrying on business of insurance company, etc., UTI, then notified institution or association or body, etc. See, what they usually do, they have huge amount of money which they will give to others as a loan. and on that others, there are many people who are going to give them interest. So the payers will be multiple payers who are going to give them interest. So if all the payers will deduct the TDS, so now it will be inconvenience for the government to recover that TDS amount from these many payers. Okay, no? So payers, you are please instructed that if you are giving the interest to these entities, these pays, please don't deduct any TDS. Will you remember? Next one. Income credited by way of interest on the compensation amount awarded by Motor Accidents Claim Tribunal. So any compensation, okay, which is awarded by Motor Accident Claim Tribunal, on that whatever interest income is credited, on that also there will be no TDS. So sometimes what happens, your car, your motor vehicle meets with an accident and you file a claim with the insurance company, and if the insurance company denies the claim, so you go to a court to get that claim. So that court is known as Motor Accidents Claim Tribunal. So where if you win the case, that means the Motor Accident Claim Tribunal will tell the insurance company to give you this compensation. Okay, so with that compensation also the interest comes. So whatever interest which is credited on the credited on the compensation awarded by the Motor Accidents Claim Tribunal. Now this interest who will credit? Insurance company in its books. So at the time of crediting this interest, the TDS will not be deducted. At the time of payment of this interest, the TDS will be deducted if the payment is more than 50,000. See, income paid. Can you see credited? I have highlighted, and the paid I have highlighted. So whenever the interest on the compensation awarded by the Motor Accident Claim Tribunal is paid by the insurance company, that time only the TDS is deducted. It is not deducted at the time of crediting. So now Motor Accidents Claim Tribunal has passed the compensation. Now that compensation you are supposed to pay with the interest. So you have passed the entries and all in your books, meaning you have credited that interest in your books. But at that time you are not going to deduct any TDS. Yes or no? But wait, whenever that interest will be paid, at that time the TDS will be deducted, and provided the amount is more than 50,000. But what if the amount is not more than 50,000? Amount is not more than 50,000, then there will be no TDS. Got it, sir? Now the last point. Income paid or payable by infrastructure capital company or infrastructure capital fund or infrastructure debt fund or a public sector company or scheduled bank in relation to zero coupon bond. By the way, that is not treated as interest, that is treated as discount. Hello? And that is taxable for you not as your IFRS income, that is taxable for you as your capital gain income, if you remember. So the income is not in the nature of what? Interest. Income is in the nature of what? Discount. Whatever extra amount which is coming to you over and above the issue price, face value will come at the time of maturity. So whatever extra amount is coming, it is in the nature of discount. It is not in the nature of interest. So why the TDS will be deducted under this section? Forget it. No TDS here also. Yes or no? Next one. That's it. Expression time deposit. What is the meaning of time deposit? I have already told you. Senior citizen, meaning of the senior citizen we all know. Okay. Power to central government to issue notification. Now whenever there is some deposits which are notified by the CG, on those deposits whatever interest will come, no TDS will be deducted. So there is a power to the central government to issue such notifications. Okay, no? And in those notifications, whatever deposits, whatever whatever ways, whatever type of interest which the government will notify, on those there will be no TDS. So to whom the power to notify such interest is given? To central government, and whenever the central government will think, the central government can issue such notification, and on the notified interest there will be no TDS. Getting my point? Now come to this illustration. Examine the TDS implications under 194A in the cases mentioned under. On 1st October 2024, Mr. Harish made a 6 months fixed deposit of rupees 10 lakh at 9% per annum with ABC Cooperative Bank. Fixed deposit matures on 31st March 2025. See, what will be the interest? 10 lakh into 9%, 90,000 interest, but that is a 6 months. So you are going to get the interest for only half year, 45,000. Now, is Harish a senior citizen? Tell me yes or no. He is not a senior citizen. So the limit checked will not be 50, limit checked will be 40. So is the interest on this FD, he is going to get more than 40? Yes. So the TDS will be deducted at the rate of 10% and the amount of TDS will be 4,500. See, such type of easy questions they are going to ask in the exam. Trust me on this. Such type of questions they are going to ask. But you will be able to crack these questions only if you have studied the provisions properly, thoroughly. Okay. Now see, on 1st of June 2024, Mr. Ganesh made 3 9 months FDs. 3 FDs he is making. Okay, not 1, 3 FDs. And each FD is for 9 months. So interest will be calculated for 9 months only. Of rupees 3 lakh each, carrying interest at 9% per annum with Dwarka branch, Janakpuri branch and Rohini branch of XYZ Bank, a bank which adopted CBS. Thank God. If the bank would not have adopted the CBS, we would have checked the limit branch wise. But now the bank has adopted CBS, so all the branches total interest will do, and that aggregate amount should be more than 40, more than 50. Yes or no? Now see, 3 lakhs into 9%, 27,000 divided by 12 into 9 will be 20,250. 20,250 interest from one FD. So likewise 3 FDs are there. So 60,750 will be the total interest received from XYZ Bank. Yes or no? On that entire 60,750 the TDS will be how much? 10%, because it exceeds the threshold limit of 40,000. See, if Mr. Ganesh was a senior citizen, then we would have checked the limit of 50. Then also it was more than 50. Hello? The TDS would have been 10% of 60,750. So each branch will deduct TDS on what? 20,250, 20,250 each branch will deduct. That means on the entire 60,750 the TDS will be deducted by entire bank. Hello sir. Next one. On 1/10/2024, Mr. Rajesh started a 6 months recurring deposits of 2 lakh per month at 8% per annum with PQR Bank. The recurring deposit matures on 31st March. See, this is a recurring deposit maturing after a certain time. So this is also a time deposit. Now on this recurring deposit, no, you are first supposed to very clearly and properly calculate the interest. So what will be the interest amount on this recurring deposit? Please pay attention. What is the interest? 2 lakh. 2 lakh rupees is the recurring deposit. Every month 2 lakh rupees is deposited. Hello? On that 8% interest will come. That 8% is the per annum interest. So you are supposed to divide it by 12. So first month interest will be 133,333. Hello sir. Wait. Please pay attention. Here, listen to me. Now for the second month, 2 lakh will be invested again. But for the second month, the interest will not come on 2 lakh. It will be coming on 4 lakhs. Because it is a recurring deposits. Getting my point? So every month 2 lakhs will increase. So for the first month 2 lakhs. Second month 4 lakhs. Third month 6 lakh. Fourth 8 lakh. Fifth 10 lakh. Sixth 12 lakhs. Likewise for every month 2 lakh will increase. Understanding? So on 2 lakh 8% into 1 by 12. On 4 lakh 8% into 1 by 12. On 6 lakh into 8% into 1 by 12. On 8 lakh into 8% into 1 by 12. 10 lakh into 8% into 1 by 12. Then 12 lakh into 8% into 1 by 12. Every month interest you will calculate. No, monthly interest. Now total all the monthly interest. The total will not be more than 40,000. Total will not be more than 50,000. Hence, the TDS requirement is not there. So no tax has to be deducted on the interest of 28,000. How that 28,000 is calculated? The manner of calculation I have already shown you. Hello sir. First 2 lakh 133,333. Then 4 lakh into 8%, 32 divided by 12, 2667. So 1,333, 2667. Okay, then on 6 lakh into 8%, 48,000 divided by 12, it will be 4,000. Okay, so first one is 1,333, then 2667, then it is 4,000. Then next interest will be on 8 lakh into 8% divided by 12 will be 5,333. Then it will be on 10 lakh into 8% divided by 12, it will be 6667. Then last one is 12 lakh into 8% divided by 12, it will be 8,000. Please calculate the total. Are you getting 28,000? How are you getting interest for every month? I have already shown you the calculations, told you, spoken in front of you. Now I have calculated also. 28,000 you are getting. See, this question came in the exam. Yes, 2 marks. And everyone, almost everyone made a blunder here. Because they could not calculate this interest only. Recurring means what? Every month 2 lakh will increase no in your deposit account. So first month it will be interest for interest on only 2 lakhs. Now the second month again you will invest 2 lakhs, meaning that for the second month the interest will not be on 2 lakhs, it will be on 2 plus 2, 4 lakhs. This common sense you should apply. Got it, sir? Sure. Now this is the end of 194A. So what are we going to do? We are going to meet tomorrow also, and tomorrow we are going to finish this. Okay, so we'll meet tomorrow, and tomorrow I'll tell you the time. Okay, I'll text you the time. So maybe we are going to meet a little bit early, and tomorrow we'll wind up everything. Right? See you. Bye bye.